cycle between wage and price growth is
A lot of the
strengthening,
changes that she
according
had
to
asked to be
Nikkei.
implemented, including the longer time for the divestiture, were implemented in the House bill. So she is now on board with it. So we're expecting to see pretty much, strong support across both parties, with the outliers in
Sure.
like Senator Rand Paul and Senator Mike Lee.
Could this actually get more than the 70 votes this very similar package garnered the first time around? Could we actually see that bipartisan majority expanding when this vote finally happens?
We could. I haven't run the numbers exactly, but there's certainly something in here for just about everyone to like, which is why it passed the House in those sort of
in parts.
In parts, yes. And so with the Senate voting on it in one comprehensive bill, if you support Israel, if you support Gaza, if you support Ukraine, there's something in there for you to vote for.
We're hearing the term coalition government on the daily now, in this program at least. It's not a formal power sharing agreement, but with what we have seen over the past couple of days with Mike Johnson, is it worth that type of framing, or is this just a bipartisan government working and no one recognizes it?
I think it is a bipartisan government working. And this is how Congress should work. We just haven't seen it work this way in quite some time. And what you saw happen in the House, while very unusual, getting Democrats on board to push this bill through on over various procedures that ultra-conservatives were opposing, that's deal making. That's kind of good old-fashioned deal-making that we just don't see happen in Washington very often anymore.
Well, and if you listen to Congresswoman Marjorie Taylor Greene, she maybe wouldn't like to see that continue happening, because she thinks Mike Johnson is essentially rolling over for the Democrats and may still very well pursue this motion to vacate for that reason. And yet we did hear once again from former President Donald Trump, who was speaking on a radio show yesterday talking about he thinks Mike Johnson's a good guy. He has a one-vote margin, trying to kind of paint the picture of the reality it is that Republicans are working with. If Trump's not on board with the motion to vacate, can Marjorie Taylor Greene realistically move forward with it?
I think it's very difficult. She's obviously very close to the former president, so I don't see her moving forward without his tacit approval. Now, Trump can change his mind on somebody pretty quickly.
Right.
We've seen that happen in the last 7 years. So we'll see what plays out over the next few weeks. But as of right now, he's standing pretty steadfastly behind the speaker. I would say his comments yesterday were even stronger than the comments he made at Mar-a-Lago.
Yeah.
All right. Well, you're in for a long night, it seems, Megan. Thank you very much for spending some of this day
with
us.
Bring in the pizzas for the Congress team.
Pizza, caffeine, bring it all. Megan Scully leads our congressional coverage here at Bloomberg. Thank you so much. Now, of course, Joe, we've talked extensively about what the ultimate passage of this bill will specifically mean for Ukraine's war effort. Immediately, as the Biden administration says, they're all set up to get things quickly onto the ground for the Ukrainian war effort. But it's also an Israeli war effort that the U.S. is attempting to support here, with nearly $20 billion in aid to Israel as part of this package. And that is on the note. We turn now to Hagar Shamali. She is former national security, formerly with the National Security Council, now the founder of Greenwich Media Strategies. She also is an adjunct professor at Columbia University School of International and Public Affairs. Hagar, it's always great to have you. What will these billions of dollars in aid for Israel immediately do to the ongoing conflict we are seeing Israel engaged in with, frankly, not just Hamas, but other Iranian proxies, including recently Iran itself?
Sure. Well, the way anybody should view U.S. aid to Israel is in the context of qualitative military edge, maintaining and supporting their qualitative military edge. That means, in more normal speak, that we're trying to ensure that Israel always has the upper hand when it comes to defense in the region. We know they're surrounded by enemies, and our non-NATO alliance that dates back to 1987, that is the agreement ultimately, is that we work to maintain their qualitative military edge, not that we try to promote certain behavior. And so what that's going to do in this case, on one hand, it's going to allow them in general, from the 60,000 foot level, to continue their operations inside Gaza. On the flip side, you're going to have as well, it's going to be coupled with dialogue and talks on the United States side who communicate their concerns to the Israeli government in terms of their military strategic approach inside Gaza. So on one hand, you have that. And on the other, you have a lot of it in particular that's going to go to the Iron Dome and to the other defensive systems that Israel maintains, especially following what you saw coming from Iran only a couple of weeks ago.
Hagar, just in the past couple of days, we've seen a few remarkable headlines coming out of Israel. The head of Israel's military intelligence unit has resigned, and there's reporting that the U.S. State Department is now preparing to announce sanctions against a battalion within the IDF for human rights violations. Considering the very strained relationship that we've talked about already between Joe Biden and Benjamin Netanyahu leading up to this moment, how would you describe this moment we're in now?
It's a little weird. I'm not going to lie to you. That's the only term I can think of. When I saw the news saying that the Biden administration was preparing sanctions on this one unit within the IDF, it's not that I approve at all in any way what that particular unit is doing. That unit, as far as I
Yen
understand,
surges to
is
session highs, trades at 154.64 per dollar.
Comprised of far-right Orthodox individuals who have been previously accused of human rights abuses in the West Bank. Fine. But Israel is an ally. And so when you have a problem or concern or you vehemently oppose something that an ally is doing, typically you hammer that out in conversation, in dialogue. And that's why I find it a weird use of the sanctions tool. Now, sanctions in this regard, what ends up happening, if you sanction that one unit, that not only means that the United States is not able to give weaponry to that unit, and they will prove that, they will have to continue proving that, but the onus will also fall on the Israeli military and government to also prove that, or ensure that no weaponry that is U.S. weaponry is going to that unit. So on that front, I can support what the U.S. is trying to achieve. I think I understand the broader goal. I understand it because the U.S. is trying to say, hey, that unit and in general settler activity in the West Bank undermines U.S. national security objectives because we see a two-state solution as the long-term sustainable solution to this conflict, and this settler activity directly undermines that goal. I agree with all of that. I just find sanctions are a bit of an aggressive tone to take at this stage when Israel is in the middle of all this. At this time to take toward this. I would have rather seen that handled in private conversations, even publicly, by the way, is fine. And as the war dies down, if it remains a problem, then you sanction them, fine. And then you've made your point loud and clear. But at this time, it just further highlights the strain that you're seeing and puts it out in the open.
Yeah, well, we've seen a lot put out in the open publicly, Hagar, including what was escalating tension between Bibi Netanyahu and President Biden, specifically over the issue of Rafah, as the U.S. pushes Israel not to potentially put at risk the lives of the million-plus Palestinians that are there. But now, especially that it seems the immediate direct conflict with Iran may have been wrapped up at this time for Israel. Should we expect that it is Rafah next and potentially soon?
Well, the airstrikes on Rafah have already begun on the part of Israel. And what's interesting, and I'm glad you're covering it, because given what you had with Iran, and certainly given what you're having now with protests here across the nation and at universities, including the university I teach at, the focus seems to be on that, and not the fact that things are continuing in Gaza, in particular the airstrikes on Rafah. Now, you have airstrikes on Rafah, but we haven't seen this kind
the
of
results of the Fed reverse repo operation
and operation that we've all been waiting for or anticipating. But inevitably, it's going to go down that road. I believe it will go down that road. The Israelis claim. The Israeli government claims that they're going to be evacuating citizens, but we haven't seen it yet. And so it remains a bit murky, at least from the public view, as to where the Israeli military is headed with Rafah. Clearly, they've made a decision to go in. That is not surprising. They've said that. I never had any reason to doubt it. But at what point will they be evacuating citizens in order to ramp those operations up is unclear to me. That said, they have also said that would indicate the end of their high-intensity portion of the war. And so we are hopefully reaching an end to that at some point soon. But Rafah, I expect it to intensify further.
71
You've
counterparties
got
take
members of the Senate,
435
Tom
spots
Cotton, Josh
88
Hawley,
billion at the
calling on
Fed
Joe
reverse
Biden to
repo
send the
operation.
National Guard into Morningside Heights. Can you talk to us, Hagar, about how this is going to end on the campus of Columbia University and other campuses? We're coming up on the 4th of May, which is the anniversary of the Kent State shootings. This is very real right now.
Oof, well, how it ends is very unclear, and I can say that with a lot of firsthand experience being an adjunct professor at Columbia right now. It is a very difficult situation on campus, and the administration is really grappling and struggling with its response, because on one hand, you had the response last week where they invited the New York City Department to remove protesters after they had been repeatedly warned that they were in violation of rules, that they had no right to stay there, and that if they didn't move, they would be forcibly removed. And that's what happened, obviously. I was in support of that, because I believe a university it's a private institution, it's a private campus. And while students have the right to protest and exercise free speech, they don't have the right to violate Columbia rules and guidelines. And they certainly don't have the right to create a hostile environment for other students who are on campus whose main priority is to study and learn. And so they were removed. And that removal obviously has created this reaction where the encampment is back. The protests have now spread to other universities. And you can see the university now really grappling with, well, since that was a reaction to the police, do we double down on that, or do we dialogue with them? And that seems to be the approach they're taking now. They've allowed the protests. They've said that they're going to dialogue with the protesters. I can tell you that the protesters are not unified. Their demands are absurd. Some of their demands, at least. They're very disorganized. And so they come off extremely unserious in negotiations, because they're students, by the way, at the end of the day. But that they're going to dialogue with them. And at the same time, they shut things down to go virtual for classes, and offered escorts, for example, for Jewish students attending Seders. And that, to me, is wrong.
Yeah.
I don't understand, as a professor, why I should go virtual and my students, because certain students are creating an
Hagar, come back when we have more time. Hagar Shamali, this is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Bloomberg Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Equities heading toward their biggest back-to-back advance in 2 months. Earnings and economic reports looks like they're in the driver's seat for investors today. After the close of regular trading today, the first of the Magnificent Seven set to report. That's Tesla. And ahead of those earnings, its shares right now, they are up about 2.5%. Besides Tesla, Microsoft, Meta Platforms, Alphabet, they're also due to report earnings this week. NVIDIA shares right now, they're leading the semiconductor stocks higher. Shares of NVIDIA, they are up just about 3% right now. United Parcel Service, which is considered by many to be an economic barometer, reporting profit that beat estimates. And on the data front, U.S. business activity expanding in April at the slowest pace this year. So that gives fuel to the argument that the Fed is going to have to cut interest rates at some point this year. S&P 500 right now, that is up 57 points. That's a rise of 1.1% at 5,068. The Dow Jones Industrial Average, 257 points higher. That's up 0.7%. And the NASDAQ Composite Index right now is up 235 points. That's about a 1.5% pop there. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues right now with Joe Matthew and Kaylee Lines.
All right, John Tucker, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where we're broadcasting live on Bloomberg and television and radio from the studio. Well, we also kind of wish we could be a fly on the wall in the U.S. Senate right now, because there's some debate happening on the floor, at least speeches on the floor. Right now, the independent senator from Vermont, Bernie Sanders, is talking about this $95 billion aid package that is getting set for a few procedural votes and ultimately eventually final passage. We expect later today or at some point Wednesday, Joe. We just had the Republican senator from Utah, Mike Lee, talking as well. What we're going to need to find here is some agreement on what amendments they're going to vote on and when, then a cloture vote, and then ultimately the real deal.
This is the sausage being made. This is the part you're not supposed to see, but we're showing it to you. Live from Washington here, procedural votes that will lead to real votes, and it might be really late tonight, Kaylee, maybe early in the morning. They're talking about whether to bring in the cots. They'll definitely be bringing in the fast food and the wine. You didn't hear it from me, but that's the way it goes around here. But yes, making an agreement here on how to use the floor time, satisfying members of both parties. In this case, Kaylee, you just walked through that pretty well. There are Democrats and Republicans who want to be heard today, but it is not expected to change the outcome of this vote, and that's what we want to talk about with our panel. Rick Davis is with us, Republican strategist, Bloomberg Politics contributor, joined today by Pat Dennis. Of course, back with us today, Democratic strategist and founder and president, American Bridge 21st Century. Great to see you both here. Rick, this is a foregone conclusion that these bills are going to pass. But what we're about to hear from the Mike Lees and Bernie Sanders of the world does tell us quite a lot about the debate around these bills, and that's not going to end when the president signs them, is it?
No, this kibitzing will continue on. People will continue to campaign on it. Look, it's a issue that the American public is relatively undecided about, right? They've been moving around quite a bit on issues related to Israel and to Ukraine. And so I think these members want to start staking out positions. They're headed into an election year, and they want to make sure that they get their bite in before the end of the weekend. But it's really a trading range on votes. Last vote on this was 70 votes in the Senate out of 100. It's plus or minus 3 or 4 votes, and I think that's where we're going to wind up tonight.
So as we're seeing some of these other senators taking some time on the floor, including Republican Senator Mike Lee, who we mentioned, we did hear on the floor earlier today, Pat, from Senator Mitch McConnell, who is the outgoing Senate minority leader. He, of course, will no longer retain that leadership position after the election, but he has been fighting the fight on getting Ukraine aid through this chamber, through Congress more broadly, loudly and vocally, sometimes in the face of serious opposition from members of his own party. We've talked a lot about how this package passing is a victory for President Biden, but is it too for Mitch McConnell?
Potentially. I mean, he's on his way out. It seems like he's sort of maybe trying to work on some of the stuff he actually believes. But, to a large extent, the MAGA faction within the Republican Party can trace its roots and its power back to Mitch McConnell in a lot of ways. And those are the ones who really are the reason this bill is 6 months later than it should be after, significant setbacks in Ukraine and people dying that didn't have to happen. And look, I'm glad we're getting this bill passed. I think Congress starting to work together and actually get some bipartisan stuff done is a testament to Joe Biden's leadership. And I'm hopeful it can continue.
Just said a name that I haven't heard anyone mention in a while, Pat, and that's Mitch McConnell. Rick Davis, what does Mitch McConnell do with this moment? Having stood his ground, and he's got something to show for it in this case, does he circle the wagons again? And I know that there's a battle here for the next leader, but while he's in charge, circle the wagons here and say, take this lesson. You might want to listen to your leader next time.
Yeah, I think that this is as much about his legacy as it is about the future. If there are two winners in this entire drama for the last 6 months around Ukraine funding, it's been Mitch McConnell and Joe Biden. Both have stood firm with their competing constituencies. Joe Biden certainly took a lot of gas from the left on his support for Israel, and Mitch McConnell has had to plow back the advancing populist MAGA Republican tide in the Senate by holding firm on this. And they can both really feel good about the fact that they've done something special. I would say, Mitch McConnell will probably not be remembered for what I think is one of the more historic achievements of the Senate, which is a bipartisan bill on this issue that included the strongest title we've had on border security in 30 or 40 years. And it wasn't MAGA in Senate that stopped that from happening. It got passed. It's the MAGA right in and Donald Trump, really specifically, who deserves credit for killing that in the House. And we could actually be celebrating a really significant event here if they'd have kept that title in.
Well, Rick, you bring up former President Trump and the MAGA right in the House. We know some members of that faction of the Republican Party, namely Marjorie Taylor Greene, Paul Gosar, and Tom Massey, would like to see the House Speaker, Mike Johnson, potentially vacated or resign as a result of this foreign aid making it through that chamber. And yet it seems Donald Trump, for the second time, has stepped in to defend Mike Johnson. He was asked about him on John Frederick's media network last night. And this is what he had to say about the House Speaker. Take a listen.
It's a tough situation when you have one. I think he's a very good man. I think he's trying very hard. And again, we've got to have a big election. We've got to elect some people in Congress, much more than we have right now.
So, Rick Davis, is Donald Trump guaranteeing that Mike Johnson will stay the Speaker? Can Marjorie Taylor Greene go against the de facto leader of her party, someone who she's very close with?
Well, I actually don't think Donald Trump can guarantee it, but Hakeem Jeffries can, because he's got actual votes on the floor that would vote for Johnson. And I think Donald Trump only has votes that would vote against Johnson. Marjorie Taylor Greene wasn't going anywhere with her sort of showboat maneuver. Her performative, politics is exactly being laid bare now because there's nowhere for her to go. And even Donald Trump thinks it's a bad idea to have chaos in the House of Representatives right before an election. That didn't take much effort to think through that problem. So, yeah, I think that Donald Trump is only going where he thinks is the safest place for him to go right now, and that's back in Speaker Johnson. But, he backed Speaker McCarthy before throwing him to the wolves. So I wouldn't get too far along in my victory lap if I were Speaker Johnson right now.
Throwing him to the wolves, indeed. Look, we've got a lot to witness left today. And if you're just joining us on Bloomberg Radio and TV, the process has begun in the Senate. We're actually watching a roll call vote take place now on a motion to table, to kill this entire package that passed the House and was stitched back together again here in the Senate. It is expected to pass this bill despite the efforts to change it or kill it along the way, and it might come hours from now. It might come a lot later. All the while, Donald Trump, aforementioned, is in court today in New York for what was another half day, and Joe Biden is in Tampa campaigning. Pat Dennis, how does Joe Biden leverage the momentum coming off of this? We're all talking about Mike Johnson and his political win, his political future. How does the president ride this to his benefit on the campaign trail?
I mean, ultimately, what is to the American people's benefit is to Joe Biden's benefit. You have steady leadership. He's getting this stuff passed. People forget, but, Donald Trump was trying to get aid passed to Ukraine and wound up trying to extort our friends and ultimately got impeached over it, which is, kind of a big deal. I think what you see Joe Biden doing in Florida, though, is really showing the contrast between these policies where, Congress is doing stuff that actually works, passing stuff that the American people want, versus a state like Florida where you have these extreme abortion bans really hurting people's quality of life. And that contrast right there between the Joe Biden future and the MAGA future is exactly what he needs to be doing.
Just quickly, Brad, we have less than a minute left, but why spend time in Florida with that message? Why not spend time in the swing states that are ultimately going to decide whether or not you get to be president for a second term?
I wouldn't write off Florida so quickly. Look, there's a lot of discontent there with Ron DeSantis' leadership, with Trump's leadership. And yes, there are other states. There's North Carolina, there's Michigan. My organization is going to be focused on Pennsylvania, Wisconsin, Michigan in particular. And there is going to be a lot of Joe Biden in all of those states. I can guarantee it. So don't just think just because we're going to Florida, we're not going everywhere else.
All right. Pat Dennis, thank you so much for joining us here on Bloomberg Television and Radio. He, of course, is American Bridge 21st Century President, Democratic strategist, and Rick Davis, a Republican strategist and Bloomberg Politics contributor today, as we still, Joe, are keeping an eye on the Senate floor. And, of course, we'll update you when actual votes are cast and we're on our way through these procedural procedures.
That's right. We're keeping the cots handy in case it's a really late night, Kaylee. Let's bring everyone up to date on what's happening elsewhere in the world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. And as you were just discussing, senators are back on Capitol Hill to vote on that $95 billion in war aid to Ukraine, Israel, and Taiwan. Today's vote, of course, delayed. Senators are making speeches for and against the legislation. Senate Minority Leader Mitch McConnell.
The Senate sits for a test on behalf of the entire nation. It's a test of American resolve, our readiness, and our willingness to lead.
Senate Minority Leader Mitch McConnell. Columbia University's main campus has switched to hybrid learning for the rest of the semester amid protests over Israel's war with Hamas. New York City Police Department Deputy Commissioner of Legal Matters, Mike Gerber.
They informed us that they had students who were trespassing. They asked us to come onto campus to take action, and we did.
Demonstrations also took place at New York University, Yale, the University of Michigan, and on the West Coast, police reporting a large gathering on the Cal Poly Humboldt campus. The first witness in Donald Trump's criminal hush money trial in Manhattan, David Pecker, former publisher of the National Enquirer, explained how he would, quote, help the campaign at Trump's request to cover up several sex scandals during the 2016 campaign, and the judge has yet to rule on whether he believes Donald Trump violated a gag order. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
This is Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Technology heavyweights rallying today, and that's helping lift the broader market right now. Every member of the so-called Magnificent Seven cohort of mega cap technology stocks rising. Among them is Tesla. Right now, those shares are up 2.2% ahead of their earnings after the close of regular trading in New York today. NVIDIA, we'll call it the poster child of the AI boom. That's leading a surge today in the chip maker stocks. And United Parcel Service reporting profit that beat estimates. Also, news today, a top regulator is asking large Wall Street banks for non-disclosure agreements. This is in their swaps and clearing businesses. They're trying to see whether they muzzle would-be whistleblowers. The Commodities Futures Trading Commission has reached out to a number of banks, and they include J.P. Morgan Chase. Right now, the S&P 500, 60 points higher. That's up 1.2%. We're at 5,070 on the index. The Dow Jones Industrial Average is up 294 points. That's a rise of 0.8%. The NASDAQ Composite Index right now up 239 points. That's a rise of 1.6%. Auction of Treasuries today. Let's take a quick look at the more policy-reactive 2-year yield. Down 4 basis points. That's at 492. The 10-year is 2 basis points lower. That's at 458 right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Balance of Power continues with Joe and Kaylee.
John Tucker, thank you for keeping us honest on the markets. We're trying to keep you honest on Congress today. And you know that's a tough job. But we're watching voting get underway here in the Senate, a motion to table the foreign aid bill that would bring money to Ukraine, Israel, and Taiwan. Also includes the TikTok bill and some other matters. Is likely to survive this, but we have to go through the motions. There are going to be a few procedural hurdles, including the actual cloture vote that will bring us to real voting up or down on the underlying bill. That's expected to happen late tonight, if today. We'll go through it together and let you know, of course, what happens here. I'm Joe Matthew alongside Kaylee Lyons in Washington. This is the day, Kaylee. The president says he will sign it. And one of the biggest backers of this effort, and we've been in touch with them for months here, is the U.S. Chamber of Commerce. Remembering, there was a branding issue with this bill. We talk so much about foreign policy, geopolitics, and that's, of course, an enormous, that's the backdrop for this. But the spending is largely domestic, investing in our defense industrial base.
Yeah, when we talk about the 60-plus billions of dollars for Ukraine, a large chunk of that isn't actually being sent over to Ukraine in the form of cash in suitcases. It's being fed into our defense industrial base so that we can manufacture equipment largely to fill the stocks of what we already had sent over to Ukraine. And this could be a juicer of the U.S. economy in many ways for that reason. So it's on that note that we begin now with Neil Bradley. He is Executive Vice President over at the U.S. Chamber of Commerce, also serves as their Chief Policy Officer. Neil, great to see you here in our Washington, D.C. studio. You, just days ago, before the House passed this legislation, penned a letter to them urging them to pass this because you say not only would it provide crucial funding and urgently needed military assistance to our allies, it would support a more robust domestic defense industrial base as well. How important is it that this legislation pass for U.S. business, for the U.S. economy?
Well, it's critical when you think about our defense industrial base. So there's one buyer largely, and that is the U.S. military. And when we begin to mothball weapons, when we begin to slow down those supply chain lines, it takes a long time to start back up. We know that we are in a world that is more dangerous than it's been in a long time. And so the ability to modernize our defense industrial base and those supply lines is critically important. And it's exactly what you just said. What we're doing is sending older weapons over to Ukraine, restarting our own domestic manufacturing facilities, in many cases expanding them to refill our own stockpiles. It's kind of one of those win-win situations. Not only are we helping the Ukrainians in the fight against an aggressor, we're improving our stockpiles of our own weapons, and we're improving our domestic manufacturing capacity.
There's a momentum here, and you're referring to it. It takes a long time to get it started again, as you just said, once you wind it down. And there's been a big conversation about underinvestment when it comes to the DIB, the Defense Industrial Base. With that said, if we're firing up the engines again here, and in some cases expanding capacity, Raytheon has talked about the need to expand its manufacturing capacity. Where does that momentum bring us in the years ahead?
Well, it's a question of what do we need to sustain our own national security. Ultimately, at the end of the day, that's what's driving it.
Does it sustain jobs?
It does sustain jobs, but listen, the driving impetus isn't to become a self-generative jobs machine. It really is our own national security. But we realize that when we make those investments, we want to maintain some base levels of capacity. And I think what experts have concluded is that we let that capacity, our ability to produce these things, get to a point where it made it harder to restart and ultimately was endangering our own security. So I suspect that as we get through this moment and period, we're going to figure out what's the right sustainable level that keeps supply chains operating, that keeps these facilities operating.
And prevents a shortage?
That prevents shortages and matches our needs. The other interesting thing that's going on here is, like in every other aspect of the economy, weapon systems are constantly advancing. And so, you know, if your stockpile consists of a model that's 10 years old, it is antiquated by today's standard. And the only way that you can keep up with the standards and the technology today is to be constantly innovating and manufacturing. So what we're building today is much better for our own national security, much more technologically sophisticated than the stockpiles that we're drawing down.
Well, I'm glad you mentioned technology specifically, because it's worth noting while the Chamber has advocated for this package for its national security merits, this is not just funding for allies. There's been a few other things attached, including the TikTok divest or ban bill, an expanded window. They now have a year potentially for that divestiture, but this is a specific private company being called out in legislation that is working its way through Congress and looks like it will get a signature from the president. Does the Chamber have any concerns about the precedent this may set moving forward if we're now in the business of targeting specific companies and telling them who can own them and who can't, and who can control their algorithms?
Yeah, without getting into the specifics of TikTok's ownership.
Sure, just as an example.
As a larger question, there clearly is vulnerabilities with our own national security that we have to guard against, whether that's foreign investment coming in or intellectual property sharing abroad, and we have mechanisms for doing this. You know, in the 1980s, late 1980s, we created CFIUS, the Program Committee on Foreign Investment in the United States, that is tasked with making sure that we're reviewing, in that case, investments into the United States on a national security grounds and protecting it from politicalization. So I think the important thing that we want to do is make sure that we're maintaining processes that keep the U.S. open for investment, that keep the U.S. engaged commercially with the world. But when national security comes into play, is making those decisions only on a national security basis, not based on political considerations.
So will the Chamber take a stand on a lawsuit here? As we're told, this is about to enter a protracted legal battle.
Yeah, we have not opined on this particular transaction. We do opine along the strictures.
Sure.
When people propose changes to CFIUS or regulating investments abroad, we have to get the system right. And if we have the system right, then we can kind of resolve some of these questions that have emerged about kind of the political nature of the decision making.
Well, speaking of political decision-making, it's also worth pointing out that this TikTok bill, the supplemental funding, this has taken months to get across the finish line in Congress. After months prior of talking about it, it's taken us a long time to get to this moment. It's now mid-late April. We still have about 7 months to go, a little less, until the election. Can we expect anything else from this Congress in that intermittent time period? Is there anything else they're going to be able to get done, or it's all campaign from here?
Well, let's hope it's not all campaign. Listen, we're realists. We know it's an even-numbered year. It's a presidential election year. That is going to dominate a lot of the consideration. But if you think about this bill that the Senate's processing today, you're right. 6 months ago, this should have been done a long time ago. But it's been the principal issue that everyone's been waiting for the House to act on. The House acted on it over the weekend, and now we're wrapping it up for it to go to the president. The big priority that we see, unfinished business on Congress's to-do plate, is actually a tax extenders bill that passed the House of Representatives. Overwhelming bipartisan vote, something like 380-some votes. It's now sitting in the Senate. We're really looking for this May work period as a chance to get it done. Importantly, if it doesn't happen now, there's really no prospects for it to happen this year, or maybe for quite a while into next year, which means that we're going to keep in place tax increases that on a bipartisan basis, everyone agrees shouldn't have occurred, and these have real ramifications for business. You know, for small businesses that make R&D spending, the median small business has seen about a 35% tax increase just as a result of moving from deducting R&D expenses to amortizing them over 5 years. I can't find anyone who thinks that's a good policy idea, so I have no idea why we're not getting Congress to fix that.
We're spending time on Balance of Power with Neil Bradley from the U.S. Chamber of Commerce. There's an important vote today. The FTC is going to vote on whether to ban non-compete agreements. Now, this is being framed as a pro-worker effort. What are you hearing from your members? What does it mean for employers?
Well, I think there are two issues. First is the policy around non-competes, and non-competes literally go back to the founding. People had non-compete agreements when they were apprentices in workshops. So this is not a new idea. It's always been regulated at the state level. States and courts have adopted different theories. The idea that we would ban all non-competes, which is what Lena Khan first proposed, is so radical that Governor Hochul in New York just vetoed a bill that would do that exact same thing. Now, we don't know what the final policy parameters are going to look like, but we think that there's actually an even more important issue at stake here.
Okay.
And that is the authority of the FTC. Under their 112-year-old statute, they judge anti-competitive behavior in their antitrust role on a case-by-case basis. They've never, and no one's ever believed they have the authority to write rules regulating competition in the marketplace. And the reason is if they can write a rule under the guise of banning non-competes or limiting non-competes in this space, there's no aspect of the economy that they couldn't, under the guise of regulating competition, issue a regulation on. They put out a policy outline in 2022 where they talked about things like loyalty programs. Well, are loyalty programs anti-competitive because they lock you in as a consumer into rewarding a company over and over? Do we really think that three people at the FTC get to decide whether or not we have loyalty programs? They suggested things like in the M&A space, mergers and acquisitions that are currently legal under current law could by regulation become illegal. That's Congress's job, not the Federal Trade Commission's. And so we're quite worried about this power grab, that it's really opening a Pandora's box to regulate prices, to regulate commercial arrangements between parties, to really get into any aspect that they want to regulate.
So the Chamber's going to take the FTC to court over this?
We will take the FTC to court over this if they proceed.
All right. On that note, we will leave it. Neil Bradley of the Chamber of Commerce, thank you so much, as always, for joining us. He, of course, is the Executive Vice President and Chief Policy Officer. Certainly, the Chamber keeping an eye not just on federal regulators, Joe, but, of course, Congress, as we're continuing to see that congressional work happening as we speak, still working through procedure right now on the Senate floor.
Yeah, live view of the Senate floor. If you're with us on Bloomberg TV or on YouTube, they're working through a motion to table at last check, Kaylee, this entire package that is expected to eventually pass. But we're waiting for a cloture vote. That's going to be the important one, remembering that a very similar, strikingly similar bill passed the Senate back in February with 70 yeses. We've got that number in our head, Kaylee, to see if that cloture vote comes right around the same mark. Obviously, these are the same individuals voting essentially on the same thing.
Yes, with just a few things added, like we talked about with Neil, including the TikTok divestor ban bill, as well as repo, the idea that seized, frozen Russian assets that are housed in the U.S. could be used to fund Ukraine's war effort, and Iranian sanctions are in play here as well. So there are a few extra things in this, but because there are so many parts of it that many senators would like to see advance, whether it's aid for Israel or Ukraine. If you're in favor of any one of those issues, and it's all packaged together, a vote for one is a vote for all, and a vote for all is a vote for one.
Which was the design here, right? And Mike Johnson managed to get all of these passed, although it appears that if they had been brought to the floor together, they probably would still have passed. All of these separate bills got 300 votes or more, bipartisan, which is considered pretty good in this day and age here in Washington, D.C. So obviously we're going to keep tabs on this for you. It's going to happen late tonight, the real vote, not the cloture vote, if not tomorrow at one point if things start to slip a little bit. And we're going to let Carol and Tim keep tabs on this for you in the meantime, because it's almost time for Bloomberg Business Week. Carol Massar, Tim Stenevec with us right now from World Headquarters in New York. How's it going, guys? What do you have coming up today?
Joe and Kaylee, why does it always have to be so complicated when Congress is trying to pass a measure? Like, why? Why can't it be just yay or nay? Let's go. Let's put it into fact.
Well, it will be eventually. Just real late tonight.
Okay.
We have to go through all the motions, Carol, so everyone gets to have their say. You know that.
Oh, it's politics as usual, I guess, Tim.
Yeah, but something a little unusual is that we're going to have Joe Matthew join us just a little bit later on our program to help break down what exactly is going on. Also, guys, we're following Tesla because the company reporting earnings, and the stock is in, quote, no man's land, down more than 40% so far this year.
Brutal. Well, we'll look for coverage of that after the bell. And of course, we'll look forward to all of the coverage that Tim Stenovec and Carol Massar have coming up on Bloomberg Business Week, including keeping an eye with Joe on the Senate floor. Remember, we're talking procedure here. This is not a final passage vote that is upon us yet.
That's right.
We got to get through a few things first, but it is not a question of if this will pass. It's just a question right now of when, Joe.
In the throes of earnings reporting season, we're going to have a lot to talk about later, not just earnings, but we'll do this again on the late edition of Balance of Power at 5 o'clock. We'll have a much better sense, I think, then of the timeline. Kaylee, I'll meet you then.
Sounds good. This is Bloomberg Television and Radio.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
It meant that you always look different because you were the first woman, you're the first brown person, the first Asian, the first Indian, the first person of color to lead a global luxury brand. You're always the first. You're always underestimated. People don't know exactly what to expect. They're suspicious of what your agenda might be.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals. Carol Master along with Tim Stanovic live here on Bloomberg Business Week. Let's get to the setup on this Tuesday, April 23rd. And we've got, Tim, again, a rally again in those mega cap tech names.
Yeah, as we get ready for earnings from the Magnificent Seven. Well, not all of them today, but they have seen gains in today's session. Yeah. One in particular, Tesla, in the earnings spotlight. It reports after the bell today against a level of corporate chaos, and the stock is in no man's land.
Always a lot going on when it comes to Elon and Tesla. Also, Russia already threatening to step up strikes on Ukraine in response to U.S. lawmakers voting to provide new military aid to Kiev. It's part of a much bigger aid package, military and foreign aid, if you will. It's something that we know Joe and Kayla were just tracking, so we're going to get the latest on all of that.
Plus, Lockheed Martin's first quarter beat thanks to delivering more fighter jets and missile systems. The CEO weighing in.
And one more thing, drone racing. It's a thing, folks, and apparently investors are noticing. It's one of the latest sports plays. John Tucker is waiting patiently to talk about his drone racing that he's been doing. Let's toss things over to
John. They do it in vacant malls.
So you know this?
Oh yeah, no, it's
this like what you do on your weekends?
It's a YouTube channel. Let's start with the the cohort we know as the Magnificent Seven, as you guys were talking about. Tesla, after the close of regular trading, ahead of that, up over 2%. The earnings report, not really expected to be anything to write home about. All 7 of those Mag 7 stocks up ahead of the earnings reports that start today. Keep in mind, Tesla shares, they've been battered up to this point. I know you're going to take a deeper dive into that coming up. Their earnings we've already received include the conglomerate Danaher, helping power the S&P 500. Its shares up over 7%. Globe Life also doing some of the heavy lifting today. That stock 12% higher. The insurance company raising its operating earnings per share forecast for the full year. Right now, the S&P 500 64 points higher. That's up 1.3%. 5,075 on the index. The Dow Jones Industrial Average up 288 points. That's up 0.75%. The NASDAQ Composite Index 267 points higher. That's up 1.25%. Oh, and we had an auction today of Treasury debt, so we'll get into that at some point. 2-year yields right now, 4 basis points lower at 4.92. It's exciting. 10-year yield right now, 2 basis points lower.
We talked about it yesterday.
4.58.
I'm sure you were listening.
You previewed it.
Yeah.
Okay. Anyway.
You were noticing.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Carol and Tim.
Thank you so much, John Tucker. He mentioned Globe Life. That's the #1 gainer in the S&P 500.
Is it one of your gainers for later?
Yeah.
If we get to gainers with Tesla earnings?
We're going to be consumed with Tesla, no doubt about it. Well, Globe Life is definitely an outperformer today, but go figure. Tesla, which we've seen a downward move for over a week or so. It's actually up to about 2.3%, reporting earnings after the closing bell. The backdrop, you know what it is, everybody. We've talked about price cuts. We've talked about job cuts, senior execs leaving, an all-in commitment to full self-driving. And then there's Elon, well known for the unexpected when it comes to strategy and really anything.
And Tesla shares are weathering the longest route since late 2022, tumbling nearly 19% just over the past 7 days. That's before today's gains, amid the doubts about its business strategy as sales of EVs slump. With more, here is a Bloomberg News equity markets reporter, Esha Day, here in our studio. Esha, Tesla shares down about over 40%, not including today's gains so far this year. You write in your piece that their shares are in, quote, no man's land. What does that mean?
Well, as you said, shares were down 43%. And I think last I checked, they were the worst performers this year on the S&P 500.
Yeah.
So when we look at technical strategists, when they are looking at this stock and kind of trying to make sense of what's lying ahead, they're seeing very little support from technical charts. Charts are showing that from here on, the stock is already below, and despite today's gains, the stock is already below the $150 mark, which was a really key mark for this stock. And the risk is that if Elon Musk and he does not really give us anything really solid to back on, or it gives us a vague kind of outlook for the rest of the year and what the strategy is going to be, any kind of decline in this stock could start snowballing. And in that case, we may even see the stock fall as low as close to the $100 mark, which would be a huge decline from here on. But at the same time, it won't be something that we haven't seen before, right? This is something we saw in 2022 and very early 2023 2023, that was the level around which the stock was trading. And there are potential risks that we might see a drop near those levels at some point.
You know, it's interesting. You take a look at it, right? It's well below its 200-day, its 30-day, its 90-day, pick your day, and it's below it. We know the move that it's gone lower. Having said that, you look at something like RSI, Relative Strength Index, and yeah, the numbers are saying it's oversold, but it's only oversold if indeed the upbeat expectations we've had about Tesla and its growth trajectory hold. And I think that's part of it, right? And this is something we're going to get into. I mean, everybody has been kind of banking on this cheaper Tesla vehicle, which would really drive momentum in sales, and yet it doesn't seem like Elon's committed to that.
Yeah, that's really the biggest challenge this time, right? Like, if every way you look at the stock or look at the fundamentals, like, look at earnings expectations. Earnings expectations are down like 50% over the past 12 months. Revenue expectations down more than 20%. Free cash flow down more than 70%. So, fundamentals are just not supporting the stock at this point, right? So, yes, there is a possibility that the stock is oversold and we may see some sort of a near-term bounce, something that we are seeing today. But is there real support from the fundamentals? That is something we will only know after the market today. But again, let's remember, fundamentals are not the only thing that people are looking at today. What we are looking at is the strategy pivot. And if Elon Musk comes out and says that, we are going to ditch the $25,000 car that was supposed to be like the growth driver for this stock for the longest time, that is not going to be a good news for this stock, and nobody really knows, and that's where the air pocket really comes in.
You have somebody in the story, I think it was Dan Levy over at Barclays, an investment thesis pivot, right? And that's what's got everybody so disturbed, Tim, is just how he's thinking about the business going forward.
Yeah, and look, I mean, this is a guy who has weathered many storms before in the past, and this idea of such a drawdown in Tesla stock, it's not completely new to the company. Certainly new to the company being in the S&P 500 over the last few years, but not new to the company. I mean, this is a company people talked about potentially going bankrupt a few years ago in the wake of everything that happened with the Model 3. And I think it's fair to say that it certainly recovered from that. Is this time different?
It is different, but again, a lot of people that I speak to, big Tesla investors, they also do bring up this point that, this is not the first time that Elon Musk is facing a big challenge. Indeed, but again, the past is not a guarantee of the future, right? Just because he, this stock or this company kind of weathered those storms, there is no guarantee that this time it would succeed. Again, people are known to bank on Elon Musk and his abilities and for good reason. So we'll see.
What do we hear over and over again?
What's that?
He lands rockets on ships.
Well, I know, and EVs, the conversation, the narrative, and the action actually changed dramatically because of Elon Musk. So I agree that I think all of us, even as we are skeptical sometimes, we're like, never rule Elon and what he does out. Esha, but interesting to see what's going on with the stock. Keep in mind, back in November of 2021, it was a $409 stock. So we've definitely seen some move to the downside. Esha Day, equity markets reporter at Bloomberg News, joining us here in studio as we get ready for Tesla earnings after the closing bell.
Hey, also on our mind right now, what's happening on Capitol Hill? And that's where we go now to Bloomberg Balance of Power co-host Joe Matthew, who joins us from our D.C. bureau for the latest on the sweeping foreign aid package making its way through the Capitol. Joe, Carol and I were listening earlier. We were watching. We heard you and Kayleigh Lyons talking about how it could be a long night, how it's no longer a question of if, but when this long-awaited foreign aid package heads to President Biden's desk to become law. But where are we right now in the process?
We're going through some procedural votes right now in the Senate. Tim, what they're trying to do is essentially give everyone a chance to speak. There are some who are concerned on both sides of the aisle about the way these bills were written. Bernie Sanders wants to talk about funding for Israel that he opposes in some cases, wants to qualify the way that funding is provided. Mike Lee, Republican from Utah, is talking about Ukraine here, and they're both going to have an opportunity to say their pieces. This comes down to essentially a timing deal. What they do is agree on how much time will be devoted to debate. Then there'll be a cloture vote, as you keep hearing people refer to that. That would essentially shut debate down and pave the way for a real vote on those bills tonight. Guys, we see days like this a lot in the Senate. They want to get home for a recess that they've been kept from starting here. They'll bring in the takeout later, probably a couple cases of wine, and then they'll bring out the cots. That'll be the threat. We're going to spend the night here, and that will probably take take place in the wee hours of the morning.
Do
So
they
by the time we're
actually do
together
that?
tomorrow, it'll be done.
Do they actually
We know about
try?
the pizza, Joe.
Do they actually trot out like you know
yes.
the sleeping bags and the cots and the popcorn?
That's not fake. They actually do have. There's a storage room full of cots when they need that stuff. And yes, staffers are frequently sent out to get Mexican food, and you'll see them coming in with the big cases of wine. That's when you know it's going to be a late night. In this case, most of the work is happening today.
Yeah.
Once they clear through all of this stuff this afternoon, we'll have a better sense of the timing.
What I am kind of blown away by is the process getting up to here, and Speaker of the House Mike Johnson, conservative Republican. I know the Democrats have helped dramatically in this process, but you know he went down to Mar-a-Lago, talked with Donald Trump. Like I'm trying to understand his role as a power broker, like how, or maybe I'm using the wrong words. How do you see it? What's his role there now as kind of leading this process and actually getting something done, a major package?
Well, that's right. You're asking the right questions, and that was an important trip to Mar-a-Lago. The fact of the matter is Mike Johnson actually has a threat to fire him, a motion to vacate, the same exact thing we saw happen to Kevin McCarthy, and it's been filed by Marjorie Taylor Greene, and 2 other Republicans have signed on, but it's not privileged. This is just a threat right now, and she's raising money on it. The fact is, Marjorie Taylor Greene is very close to Donald Trump and wants to be in his good graces, and Donald Trump has had some very nice things to say about Mike Johnson because he does not want the distraction of a leadership battle, another speaker fight in the middle of his campaign for president here. So he's decided to make Mike Johnson his guy. And that's the best bodyguard you can get in the schoolyard that we call the House of Representatives. And to your point, Carol, he's also got Democrats backing him up. So even if they did trigger this motion to vacate, it is expected that Democrats would be there to help save him because nobody wants to live through this all over again. Might be difficult in the next Congress if Republicans keep their one-seat majority for him to be elected speaker again, but it's amazing the transformation that we have seen. And at the moment, he appears to be safe.
Does it mean, Joe, and I'm even afraid to ask this question, that we could see more cooperation between Democrats and Republicans in the House ahead of the election?
I love that question.
Maybe a border bill?
I love that question. Well, a border bill, boy, to see that happen between now and November would take a miracle in Washington. But the people are calling this a coalition government all of a sudden because of what we just saw happen. We can start talking about this with English accents if you want, but the fact of the matter is what took place this week would be kind of normal in any other period of time. It's called bipartisanship. The part that was weird for people is that you've got the Rules Committee with Democrats and Republicans who do not agree. And the fact that Republicans wouldn't go along with their own speaker on this, on the Rules Committee, does show how much division there is inside that Republican conference. And guys, that part's not about to change.
Is there something, though, in at least the House measure and as it works its way through for almost everyone, a little bit of something for everyone?
In a broad sense, yes. You can call this a win for Joe Biden, and you can call this a win for Mike Johnson, and you can call this a win for Chuck Schumer. I think that that's fair all the way around. But I would just remind everybody, this is the same bill with a couple of different dollars and TikTok, I'll give you that passed the Senate back in February. We just waited 6 months for this to take place, with soldiers in Ukraine who don't have a shell to fire. And those are probably the real winners here today.
Well, that's what I wanted to ask you. Correct me if I'm wrong, but it's almost $61 billion for Ukraine, more than $26 billion for Israel and humanitarian aid, about $8.1 billion for Indo-Pacific allies. And then, of course, there's the TikTok sanctions. When you look over it, what does that kind of tell us about what's top of mind for lawmakers and what they do want to indeed get done in terms of a major, broader policy message?
Well, the message here is going to be a domestic one. We got into some very deep debates about what our role should be in Ukraine and then separately in Israel. But the fact of the matter is the bulk of that money that you just walked through here is going to be spent here in the U.S. by investing in our defense industrial base. This is Boeing, Raytheon, General Dynamics, and Lockheed Martin, just up with earnings today. And those are the companies that have to replenish the stocks that we've been burning through here. And we haven't had a great investment in our domestic industrial defense manufacturing base here, to the point where the underinvestment has left us short in some areas. And so you're going to see a major domestic investment here into those companies, and it will benefit the efforts in Ukraine and Israel by extension. But I think some lawmakers regret the way this was pitched because most of that money is going to be spent here at home.
Joe, to that point, was there a pivotal moment here that got Republicans on board with this? Was it lumping together Israel and Ukraine? Was it something else? Was it the conflict between Israel and Iran that pushed this forward relatively quickly?
Iran's attack against Israel certainly got this moving again. This has been 6 months in the making. Of course, we go back to last year and talk about the debate. That's really what got the gears turning following Mike Johnson's visit to Mar-a-Lago. This has all really happened in the last week or two. But I'll turn around your question a little bit. It was, in fact, stripping Ukraine from Israel that allowed the House to get this done, because there were progressives who didn't like the Israel funding, there were Republicans who didn't like the Ukraine funding, and everyone had a chance to vote the way they wanted. Then they put them all together for this vote that we're about to see happen tonight.
All right, so just remind us of kind of, for those of us, all of us who will be listening and watching, Joe, kind of how the next couple of hours, how you think they could possibly play out. What kind of, signpost do we have to kind of keep an eye on?
Watch for the cloture vote. It sounds wonky, but that is essentially the test vote here that would kill a filibuster if they actually still did that in the Senate. Look for the vote number on that. They need 60 to clear that threshold to get to the real vote. Remembering that there were 70 yeses in the Senate when they voted on this thing back in February. So I'll be curious to see if they hit 70 again. Some concerns about TikTok might change that number. But if they can clear the procedural hurdle, the cloture vote, then this is basically a done deal tonight, and you don't have to stay up all night watching.
But do you have your wine, your cot, your Mexican food yet, Joe?
What is your drink of choice when you're waiting for these?
Yes. It would be wine, I have to admit. Unless, of course, they call and they say, Joe, we want you to talk about it on Bloomberg. And then I, of course, drink ice water. But, of course, these lawmakers have ice water in their veins, so they can do this.
That's a good place to end.
Be a plate.
Love it.
All right, good stuff as always. So appreciated. Our own Joe Matthew, co-host, as you know, of Bloomberg Balance of Power here on radio and television. Catch him, though. He'll be back at 6 p.m. Wall Street time and following the vote for us. So appreciate it. Oh, 5 p.m. Forgive me. Yeah. 5 p.m.
Yeah, 5 p.m. tonight.
I only tease it at the end of the show.
Yeah.
5 p.m. Yeah, so we'll know. But we might know something beforehand, but it sounds like it's going to go into the wee hours.
Well, we do know that there's a rally underway. The S&P 500 higher by 1.3%. The NASDAQ Composite higher by 1.7%. The Dow Jones Industrial Average higher right now by 0.7%.
Yeah, waiting some big earnings. We also have yields kind of backing off a little bit. 458 on that 10-year note, folks. We had some auctions. We also had some economic news. A little bit of a mixed bag there. 2-year note right now just below 5% at 4.92. You are listening and watching Bloomberg Business Week. Still to come, that foreign aid, what it will mean for Ukraine. A policy insider joins us. That's next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. You're listening to Bloomberg Business Week with Kara Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week. A live shot of the floor of the Senate, the cloture vote underway. As we just talked with our Joe Matthew of Balance of Power, one of the co-hosts there, saying that they need 60 votes to clear the threshold to get to the real vote. Basically, the cloture vote, if they get the votes, would essentially shut down the debate that's been going underway on the floor of the Senate. So that would be a key move, Tim, in this process.
We'll keep our eye on it and bring you any updates as they happen from Capitol Hill. In the meantime, let's stay in Washington, D.C. for a check on the latest world and national news with Amy Morris. Amy. Oh, excuse me. I want to stay on Capitol Hill and talk a little bit about what's going on with the vote.
Yeah, there's a lot going on today, right? And as we try to keep you certainly up to date on what's going on in D.C., and it all has to do with the $95 billion in emergency supplemental funding that would be provided, as we've been talking about, for Ukraine, Israel, and also the Indo-Pacific region under that measure working its way right now on the Senate floor. The measure would also require TikTok's Chinese owner to divest the video sharing app, impose sanctions on Iran, and seize Russian assets. So there's a lot of pieces, but the big one really has to do with military aid, in particular, almost $61 billion for Ukraine, Tim.
Well, let's get to the interview. Angela Stent is a Russia and foreign policy expert. She's senior fellow at Brookings Institution, also a former national intelligence officer for Russia and Eurasia at the National Intelligence Council, and who also served in the Office of Policy Planning at the U.S. Department of State. She's the author of the 2019 book, Putin's World, Russia Against the West and With the Rest. She's also professor emerita of government and foreign service at Georgetown. She joins us from Washington, D.C.
Yeah, and she's been a go-to throughout the Ukraine-Russian war. So, Angela, good to have you here with us. Ukraine President Zelensky telling NBC's Meet the Press over the weekend that this U.S. support, quote, will really strengthen the armed forces of Ukraine, and that now we would have all the chance to stabilize the situation. From your perspective, how important is this U.S. measure from a financial perspective, military perspective, and also from a show of support perspective?
So I think it's crucially important on all of those counts. This vote has been 6 months in the making, and in those 6 months, the Russians have made gains, particularly in the last few months. And the Ukrainians have literally been running out of ammunition and also air defenses. So what they really need is the artillery, and they need the air defenses. And frankly, if this vote had not taken place, and if Ukraine doesn't get the assistance, then I think their prospects would look pretty dim by the end of the year. If this all goes through, they have a fighting chance, if you like, to continue pushing back against the Russians and to do better in this war than they have been doing for the past 6 months.
A fighting chance, but what would you say to critics who say that even with this funding, you're just delaying the inevitable of a Russian win here?
I don't think it's inevitable. Our European allies have also been stepping up and supplying more weapons, and they're financially doing more for Ukraine than we are. European Union with a 50 billion euro financial instrument just a few months ago, money that they've given to Ukraine. So it's not inevitable. If one believes that at some point there will be a negotiation and there will be there'll have to be some kind of a settlement over territory. The Ukrainians can still make gains with our assistance. And don't forget, we should never forget, 80% of this money will go to U.S. businesses and U.S. jobs for people manufacturing those weapons.
Right. We just talked with our Joe Matthew about replenishing the U.S. defense stockpiles that have certainly been coming down as a result of this support. How is Ukraine doing in this fight? I feel like we've talked to you so many times about kind of where we are. Do we see an ending this year? Do we see an ending anytime soon? I don't know. How do you see it at this point?
Well, so as I said, it's been, Ukraine has suffered some reversals in the past few months. Russians have taken a bit more territory. The Ukrainians really have a manpower shortage now. So a major challenge for Zelensky is to mobilize more young men. They've lowered the draft age now from 27 to 25. Certainly they can go on fighting this year and into next year. What happens after that really is anyone's guess. It depends also whether there's going to be more U.S. assistance next year, which we don't know about. But the Russians seem to be doing pretty well now, and their economy is on a war footing, and they're just manufacturing weapons at a very high rate. And of course, they're getting drones from Iran, and they're getting ammunition from North Korea. And the Russians do have more men that they can put in this fight than the Ukrainians do.
On the U.S. front, what did you make of the change in position of House leadership, Professor? The idea that that the Speaker was against it until he wasn't.
Right. I think Speaker Johnson listened to a lot of people. We know that he got briefings from the CIA Director, William Burns, about just what the situation was actually like and how dire it was for the Ukrainians. He talked to a number of top Republicans, as we know, in the Senate, starting with Mitch McConnell there, and the people who were very much in favor of this assistance. He talked to Ukrainian evangelicals who managed to tell him that what Marjorie Taylor Greene had said about Christians being persecuted in Ukraine is just not true. They gave them. So he talked to a wide variety of other people. And in the end, I think the most important thing maybe was going to Mar-a-Lago and meeting with former President Trump, who himself understood that he didn't really want there to be a Russian victory, particularly if he were then in the White House. And therefore, despite his earlier opposition, President Trump, he was in favor of it, as long as some of it is a loan. And some of this money, I think $9 billion of it, is a loan, but I should say it's a forgivable loan.
Exactly, exactly. How are you thinking about Vladimir Putin at this point and how he could possibly end this war? Does he have to save face? And what his ambitions still are when it comes to his country and its ambitions?
Yeah, well, the Kremlin is furious about the vote in the House, and they're furious about this assistance. We know that there was an emergency meeting in the Kremlin very late at night after the House passed the bill. I don't think that Putin's ambitions in Ukraine have changed. He still wants Russia to dominate Ukraine, and he still wants there to be regime change in Kyiv. He may understand now that it's going to be much more difficult to do, and he can always tell his people that Russia has been victorious. He could settle for something less than the maximum demands, but that would involve territory that Russia has already taken since February of 2022. He might not be willing to give any of that up. So I think until this House vote was passed, the Russians thought that they were really in the home stretch of winning this war. I think now they have to reevaluate that.
But I mean, in terms of ambitions beyond Ukraine, do you still think that Russian President Vladimir Putin, Angela, might have some ambitions beyond that?
Oh, he no doubt does. I mean, I think the next country would be Moldova, which has a rather fragile political system and where we know that the Russians definitely have ambitions. The Baltic states and Poland are obviously very concerned. I don't think it would be possible for Russia to do another major invasion of a different country anytime soon. But it can also chip away, particularly through the use of disinformation, or in the case of Moldova, by supporting and funding pro-Russian parties that will undermine the political system there. But certainly, as long as he's in the Kremlin, I don't think he's he's going to give up any of these ambitions.
So, we have been speaking to you, Dr. Stent, many times over the last 2+ years about Russia's invasion of Ukraine. Given where we are today, what is your realistic view on how it could end? You did say that Putin might not go as far as regime change and actually taking over the entire country, but what's a realistic way for our audience to understand how we could see an end here?
Well, there would be an end to it if both sides, first of all, agree that it's time to negotiate, and neither side agrees on that at the moment. And if the Ukrainian side is willing to accept a territorial settlement that falls short of their maximum goals, which of course is taking back all territory that Russia has occupied since 2014. And if the Russians were willing, if the Kremlin were willing to accept
diesel May futures, that's what $2.57 a gallon. NYMEX gasoline May futures, that's what $2.72 a gallon. NYMEX natural gas May futures, that's what $1.79. NYMEX WTI crude futures, that's what $83.36 a barrel. That's up $1.46 or 1.78%.
Ensuring that the ceasefire isn't broken. And I think the Ukrainians would have to get pretty strong security guarantees from all of the major Western countries to bolster them, to arm them, to try and deter any future Russian invasion.
How do you think about what happens here in the U.S. presidential election? And I do want to remind everybody, we are watching and monitoring the cloture vote on the floor of the Senate, and it does look like right now we're at 59 votes in favor of the measure, and there are 60 votes, as we talked about with our Joe Matthew, that are needed to limit the debate. And this would be a major move in terms of passage of this measure as it's making its way, and then move it on to potentially a final vote there. So just a reminder, we're at 59 votes, 60 are needed to take this to the next step. So we'll continue monitoring it and let you know as soon as it crosses. Having said that, back to Angela Stent, that we were talking to, senior fellow at the Brookings Institution. Angela, how do you think about what happens in the U.S. election, who is ultimately in the White House, and what that means potentially if this war is still going on, what it might mean?
Well, so I think if President Biden is reelected, there will be continued support for Ukraine. Will the U.S. be willing to do more? Will it be willing to supply Ukraine with a range of weapons that will actually reach deep into Russian territory? That's a question. If President Trump wins the election, I think there would be a diminution of support for Ukraine. President Trump has said that he could end the war in 24 hours. Although
Angela, hang on for a second. We just do want to break in the procedural vote that has been going on in the Senate on Ukraine-Israel aid. It does have enough votes to advance this measure, this aid, which also includes a provision for TikTok. So it looks like we do have the votes here, and then it will move on. But as we heard from our Joe Matthew earlier, this basically essentially shuts down future debate on this, and then it can move on to a vote.
Okay, well, it's all politics, and I want to let Dr. Stent finish your question, Carol, which was about politics and what happens in the November election, depending on who the winner is. Please, Dr. Stent, continue.
Yeah, so I will just continue with what I was saying about if President Trump wins the election, he said that he would end the war quickly. We'll see whether that happens. But I think even if he were instrumental in ending the war, I presume that a Trump administration would want to have a settlement in which Ukraine isn't completely defeated and Russia can say that it won. I'm not sure that that would be in their interest or in the interest of the United States. I'm not sure how they would do that, but I think that would ultimately determine what they do.
That's my question, Dr. Stent. Short of actually using American force, how does the U.S. end a war?
Well, if the Trump administration were to say to Ukraine, okay, we're cutting off all funding, and if the Europeans began to cut off their funding, then of course it would be very difficult for the Ukrainians to continue fighting, although they would fight as long as they could with whatever they had. Now, so that's one scenario, which would be to force them to the negotiating table, but that would take some time too.
Hey, just to recap, everybody, we are, of course, talking with Angela Stent, senior fellow at the Brookings Institution. But again, just moments ago, the U.S. Senate has enough votes to advance the $95 billion aid package, providing funding to Ukraine, Israel, and Taiwan. The vote to limit debate and move to final passage as soon as today is, though, ongoing. And as we've mentioned, also, there were 4 pieces, if you will, to this measure. The package includes a measure that would force ByteDance to divest its ownership of TikTok or face a ban here in the United States. But again, as we talked about with Joe Matthew earlier, this is very key in kind of basically putting an end to a lot of the debate that was happening on the floor and moving it along.
So it raises the question for you, Dr. Stent, about if you think that this bill, potential bill, this measure, goes far enough.
I think it goes far enough so far, yes. I mean, if we're going to supply Ukraine with long-range missiles, which we are, I do know that we already have some weapons over the border in Poland. President Biden told President Zelensky on Monday that some of those weapons can get to Ukraine very quickly, as long as he gets the legislation on his desk to sign it. But I think hopefully it's not the last assistance package that there will be for Ukraine.
All right, going to leave it there. As always, keeping us up to date on this and really giving us some perspective. Angela Stent, senior fellow at the Brookings Institution. Her book, Putin's World, Russia Against the West and With the Rest, former policy and intelligence official, joining us there from the nation's capital.
Well, let's stay in the nation's capital and bring in Bloomberg Balance of Power co-host Joe Matthew from our D.C. bureau. Just to recap, the Senate does have enough votes to advance a $95 billion package providing funding to Ukraine, Israel, and Taiwan. Joe, so explain what happens now that the Senate does have enough votes to advance the bill.
But this is a big move, right? Correct? In moving it along?
Yeah, look, in the days now where you don't see actual filibusters on the floor of the Senate, there's no Jimmy Stewart to sit there talking you off a cliff. This is kind of the equivalent. Instead of letting people run out of breath, you have to clear this hurdle. So you get 60, you're good to go. They could have this vote and will do it at some point, likely later today. The question, though, is what's the final vote going to look like? Remembering that 70 senators voted yes the last time we went through this, when they voted this initial package back in February that we were told was DOA in the House. This is basically the same legislation. Add the TikTok component, the Repo Act, and a couple of other things. It's basically the same thing. The dollar figure is awfully close. So we're curious if it hits 70 or maybe tops that level here, and that could mirror the final vote. To your point, Carol, this is significant because we're basically taking the temperature of all the senators here as to how they feel about what will be a final vote later on today. So that's likely to happen tonight. Things are starting to move a little bit more quickly today in the Senate now that we've gotten to this point.
So what takes so long tonight? Why are they bringing in the cops?
Well,
go ahead, Carol.
I just want to mention, I'm just looking at a live feed of C-SPAN, and it looks like there are 72 yays, if you will, Joe.
That's right.
There you have it.
Yep.
And that's
72 yes, 13 no's. And that is significant to think, Carol, that this got more support with TikTok added to it. That TikTok bill, the standalone bill that passed the House, that was very similar to the language here, divest or ban. It was a shorter timeline. It only allowed 6 months to divest the company. That was not likely to pass the Senate. A lot of members had trouble with the timeline. They had trouble with the First Amendment component here. And now look at this, 74 now as we look at the count in real time. Apparently not too bothered with TikTok when it's combined with Ukraine and Israel and with that longer time horizon. But listen, we've talked about this here on Business Week. There's going to be a pronounced legal challenge that follows this. ByteDance is ready to spend money on it, and we'll see how this goes in the near term. It likely will not be decided between now and the election based on what we're hearing.
Wow.
Yeah, no, it's interesting, right, that it's going to be pushed off, and no surprise. There's a lot going on here. You know, how are you thinking, Joe? You know, we ask you this a lot. You understand these cycles that go on in Washington, the politics of everything, but, you know, this ability to actually get something done, some significant. We just talked to Angela Stent, who you know well, too. Yeah. Insider, understands Russia, understands Putin, understands the significance of helping out Ukraine, many would argue, and the U.S. being there for its broader European allies. But the significance of this and actually it getting done. No, we're not there yet completely.
Well, considering That's true, but on track to. I think it's like, we were saying earlier, it's just a question of when. And in terms of what's happening in Ukraine, it was really interesting listening to Angela Stent, because a lot of people believe that this is it. This will be the final aid package that could be approved for Ukraine. So how is that money best used? It may not be in the form of another counteroffensive. The conversation that we're hearing in Washington in a more pronounced manner is, can we use this money? How do we use this money to better strengthen Ukraine's hand at the negotiating table? We're not near peace talks. We're not near a truce of some sort with Ukraine and Russia. But when you have $60 billion in the time horizon that we know we have here with the next 6 months to a year, it's going to be interesting to listen to how that conversation moves, because there is fatigue here. While these
Brent's crude futures settle at $88.42 a barrel. That's up $1.42 or 1.63%.
Just not likely to happen when it comes to Ukraine.
Joe, now at 74 yes and 16 no.
Yep. That's right. 74.16. And there we have it. $95.3 billion in total for, we talk about Ukraine and Israel, but there's also Taiwan here and an Indo-Pac component with an eye on China. The idea was this was a national security request. And at one time in the Senate, it was also coupled with a border compromise to secure our border here and more carefully define the amnesty laws in this country. But of course, that fell apart. And now we're left with funding for these three, and then the sidecar bill, as they call it, with TikTok, Iran sanctions, and the Repo Act that we haven't talked about quite enough here. That would actually use money from seized Russian assets to help pay off this money for Ukraine. That's partly how Mike Johnson got this past a lot of Republicans who wanted to see this as a loan, not a gift.
Hey, Joe, when you talk about the timeline here, considering the amount of money that Ukraine could be getting if this bill actually does become law, what's the runway that it gives the country?
Well, in terms of Ukraine, it's really difficult to tell. They've been out of ammo in some cases for weeks. We've heard units who've been without a shell to fire for the better part of a month, and morale has been terrible. So this is going to be about rebuilding here and reassessing the strategy. It really, like I mentioned, might not be in the form of a counteroffensive, as Ukraine needs to pick its battles here carefully. The problem is that this money can bring a lot of shells, it can bring ammunition and material that Ukraine needs, but it cannot bring troops. And Ukraine right now is facing a major shortage of manpower. They're talking about different ways to conscript people, how long they should be in the battlefield, but these are exhausted members of the army, and the reinforcements are not there in the way that Ukraine needs. That's not something that we can buy, and that is something that President Zelensky is going to have to factor into his decisions when it comes to strategy and how to use this money.
All right, so appreciate it. Joe, thank you so much leading us into it and out of this key vote. And right now we're at 75 yeses, 17 noes. But again, as we said, passing that cloture vote and moving on. Joe Matthew, thank you so much. Co-host of Bloomberg Balance of Power. He's going to be back at 5 p.m. Wall Street time, and we'll continue that coverage.
Hey, we're still seeing some buying in the equity trade. Just over an hour until the markets close. Let's get an update on the way stocks are moving in business news. Here's John Tucker.
And of course, Tesla is going to kick off earnings for the Magnificent Seven. That happens after the close of regular trading today. Tesla expected to report first quarterly sales drop since the pandemic struck. Also seen posting the steepest EPS decline year over year in the Magnificent Seven. This according to estimates that are compiled by Bloomberg Intelligence. So ahead of that, the stocks all pushing higher. All the major averages are up. You have 10 of the 11 major industry groups in the S&P 500 in the green right now. NVIDIA shares leading the semiconductor stocks. And we also had some economic reports today. Business activity expanding in April at the slowest pace this year on a pullback in demand. So that kind of helps the view at this point that the Fed is going to have to raise rates, cut rates this year. Right now, the two-year yield, 5 basis points lower. That is at 492. Overall, the S&P 500, 64 points higher. That's up 1.3%. We're at 5,075 in the index. The Dow Jones Industrial Average is up 287 points. That's up 0.75%. And right now, the NASDAQ Composite Index, 277 points higher. That is up 1.8%. We check the markets for you.
You do.
All day long.
So appreciate it.
Right here on Bloomberg Radio. I'm Sean Tucker. Back to Carol and Tim.
All right, John, thank you so much. Well, shares of Lockheed Martin, we've been watching them. They, at their highs, rallying 2.6%, settling back a bit. Now, little change, slightly lower. Company out with earnings, Tim.
Yeah, first quarter operating income beat expectations thanks to delivering more fighter jets and missile systems. All four business units at Lockheed Martin increased sales in the quarter, boosting overall revenue by 14%. We've got with us Bloomberg Television's co-host of The Close, Romain Bostick, who caught up with the company's CFO a little earlier. He joins us here in our studio with more. Romain, before we get to your conversation, just tie in everything we were talking about just now with Joe Matthew, with Angela Stent, with what is happening in Washington, D.C., with what's going on with Lockheed.
Yeah, absolutely. Here, I mean, I did have a chance to sit down with Jay Malavi as well as the COO of Frank St. John. Now, of course, what happened in the most recent quarter doesn't actually encapsulate what's transpired over the last couple of days. The bill that you were just talking about in the Senate, that's about $95 billion, and a good chunk of that is going to flow to Lockheed. A lot of that is for missile interceptors and other defense programs that are going to go to Israel, to Ukraine, and of course to Taiwan as well. In addition to that, just last week, Lockheed won a contract, a $17 billion contract for another missile system here. That's a longer-term contract. Now, those aren't reflected in the most recent numbers, but looking forward into the rest of the year and beyond, they are going to have to update their forecasts.
Well, and so let's talk about that, because didn't we get some guidance a few months ago from the company? So it looks like things are actually even improving here.
Yeah, they gave some guidance 3 months ago when they last reported, and if you've looked at the stock actually has been down. It fell quite a bit, as a lot of people didn't think they were going to achieve that. When I spoke with Jay Malavi, he said very specifically that they stand by that forecast here, looking roughly at about almost $70 billion in revenue and roughly about 26 to 27 bucks a share on an EPS basis. And they're basically saying not only can they meet that, but they say they're willing to revisit that forecast at some point in Q2, though they would not commit to anything.
It's interesting to see, though, the stock moves, because it did rally today, but it's really kind of run out of steam. So it feels like, I don't know, investors waiting and
Yeah, and this is one of those stocks. It's not a volatile stock. I mean, it was up 3%. At one point, that was the biggest intraday gain going back to October. Last time I checked, the stock had basically flatlined here on the day. But they were really quick to point out, too. I mean, when they defend their business, they talk about this idea how so much of their revenue really is dispersed. It is spread out over multiple years. That's a plus. If you're getting a dividend or you're getting a buyback, that's a plus. But of course, in the short term, you're not going to get those types of volatile swings that you would see in, say, like a Tesla.
When we talk about defense contractors working on large government contracts, there are often, I don't want to say opportunities, but cost overruns that end up happening. In the most recent quarter, there was a big drag associated with a missile program. Talk a little bit about that and whether or not those losses are going to continue.
Yeah, about $100 million. This is for a classified missile program, so they don't actually tell you exactly what it is. They did telegraph that they anticipate about $224 million additional on top of that at some point this year. They were asked about this on the conference call by several analysts, and they kind of made it clear that 224 might actually be higher. Again, they would not quantify it. I did ask them about this when I had a chance to interview both the CFO and COO, and they said basically anticipate, quote, more volatility in some of those lost concessions for the rest of the year.
Well, what struck you the most in kind of, going through the earnings and then talking to these, two key top executives at the company? What struck you the most in the conversation, Romain?
I think the idea here that they see longer-term structural changes that are going to ultimately be a benefit for their business. They talk a lot about the various conflicts going on in the world right now and the missile and other capabilities. Remember, it's not just missiles, but it's a lot of the software that goes into these defense systems that they are a big maker of. And they talked a lot about how that longer term, that is where the opportunity is. They also pointed out there's only a handful of players in here that can do what they do.
But a lot of consolidation.
Yeah, it's Lockheed, RTX, and a couple other companies, and that's pretty much it.
I want to end with the F-35.
Yeah.
What update did we get on the F-35?
We got
no cost there.
We got no update on the F-35.
Of cost overruns, right?
Yeah. I mean, they would not talk about this at all. They said, look, they're aware of the clawback that the Pentagon has already issued. But again, they said at the end of the day, that's not lost revenue. It's simply deferred revenue because once again, nobody else is going to deliver an F-35. It may come late, but they're the only ones who can deliver it.
This goes back to what you say. There's only, at this point, the industry has consolidated so much that there's only a few players. Yeah. And once you commit to a program, right, you're kind of committed on something like this.
Absolutely.
Interesting stuff. Thank you so much.
Anytime for you, too.
Anytime for you as well. As we said, Lockheed Martin shares, they did rally earlier in the session, but definitely that has kind of unwound as the day has gone on. So just a little change at this hour.
Hey, we're still seeing stocks move higher as we get closer to the close. The S&P 500 up 1.3%. The NASDAQ Composite up 1.8%. The Dow up 0.7%. Of course, Tesla happening after the bell today. Shares of Tesla right now higher by 2.3%.
And speaking of the close, Remain will be leading the close coming up next on Bloomberg Television. So that's coming your way in just about 10 minutes time. Coming up for us here at Business Week, we're going to talk a little bit about drone racing. It's apparently a thing. John Tucker knows about it. This is what he does on the weekends.
So into it.
You know about drone racing?
I don't know about drone racing. I'd like to stick around for that. My show can wait.
Well, it's it's a thing, guys. We're going to get into it. That's our one more thing coming your way in just a moment.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company stories we're following. Let's start with lobbying. The 10 biggest lobbying entities this year included the U.S. Chamber of Commerce and Meta Platforms. Meta combined $90 million to influence the federal government on tax, tech, and healthcare policy as lawmakers debate legislation dealing with online privacy and kid safety. Meta posted its top spending quarter ever, $7.6 million to influence. That's according to a recently filed lobbying disclosure covering the first 3 months of the year. And the union that represents Boeing employees says the company retaliated against 2 engineers who raised concerns about the 777 and 787 jets in 2022. One of those engineers left Boeing. The other filed a formal retaliation complaint. The union says the plane maker gave identical negative evaluations to the workers who had actually been designated as representatives of the Federal Aviation Administration and who they asked Boeing to reevaluate engine work on the wide-body jets. Remember Meadowlark Lemon and Curly Neal?
Yeah, the Globetrotters.
Actually, Tim's like shaking his head.
Right? Am I
He
right?
doesn't remember. That's before your time. Harlem Globetrotters International. It's actually a company, yes. They say the Small Business Administration improperly denied them $10 billion under the program to support live entertainment businesses affected by the pandemic. Basic administrative law requirement is that an agency has to provide reasons for the decision, and they say the Small Business Administration gave no formal reason for denying the award funds. Yeah, they're still around. The Harlem. Unfortunately, Curly and Meadowlark, they're playing in that big arena in the sky. They're no longer with us. That is your
Getting
company
every jump
news,
shot, by the way.
Tim.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Senate has enough votes now to advance that $95 billion package, providing funding for Ukraine, Israel, and Taiwan. Senate Majority Leader Chuck Schumer spoke before the vote.
A few days ago, the House of Representatives at long last approved essential national security funding for Ukraine, for Israel, for the Indo-Pacific, and for the humanitarian assistance. Today is the Senate's turn to act.
The package includes a measure that would force ByteDance to divest its ownership of TikTok or face a ban in the U.S. Columbia University's main campus is switching to hybrid learning for the rest of this semester because of protests over Israel's war with Hamas. New York City Police Department Deputy Commissioner of Legal Matters, Mike Gerber.
They informed us that they had students who were trespassing. They asked us to come onto campus to take action, and we did.
Demonstrations are cropping up on university campuses across the U.S. Court is adjourned in this day 2 of testimony in the Donald Trump hush money criminal trial. The first witness was the former publisher of the National Enquirer, David Pecker, who told the court about how he would, quote, help the campaign at Trump's request to cover up sex scandals during the 2016 campaign. Also, the judge did not issue an immediate ruling, but it does look like Donald Trump might be found in contempt of court for violating a gag order. Again, the judge has not officially ruled on that. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, Amy Morris, thank you so much. All right, now to our one more thing this hour, and this has to do
You've
with
been wanting to talk about this since early this morning.
drone
You're
racing,
like a big
man.
drone racing
We've actually
fan.
bought our drone at home. We haven't played with it yet.
You have a drone?
We have a
Are they
drone.
allowed in your neighborhood?
No, but you take it out sailing when you're way
That's
out in the
exactly.
ocean, and then you can go up and like watch whales.
And we've been
or
out in the
whatever.
water, and it's like all of a sudden you hear something buzzing above you, and it's a little.
It's
a
a
little
bird,
freaky.
it's a plane, it's a drone.
All right, to the story we
Okay.
go. Drone racing, a once a niche hobby, has become the latest sports play after the Drone Racing League was acquired by metaverse firm Infinite Reality for $250 million.
What?
Yeah,
That's not
here's
even-
the, well, here's the
Quarter of $1
metaverse.
billion?
Yeah, there's money in drone racing apparently. Here's the
dumb-powered
metaverse
drones.
connection.
Yeah.
Okay, so the drone racers fly quadcopters, that aircraft with 4 propellers.
Right.
Often pilots wear VR goggles. And in those VR goggles, they get a feed from the camera embedded on the drone.
We're
and
showing
they maneuver it as if they were in a craft itself in order to steer it. It's pretty cool stuff.
John, you
can
said
see
go
up
out to
there.
malls and you see like drone racing, right?
Yeah, empty malls. They go out and race the
they are
drones
fast.
there because it's like there are a lot of obstacles in the empty malls, and
You don't want to be hitting people that are shopping, right?
What a-
It's gonna be-
that actually
Empty
be
malls.
kind of cool. Actually, I'd
Welcome
watch
to
that.
Captain Obvious. You would watch that. You are crazy.
There were some big investors in the drone racing.
I love this part of the story.
RSE Ventures.
Yeah, DRL. Are you talking about DRL?
Yeah.
Founded in 2015, primarily backed by investors, including RSE Ventures. That's the venture firm founded by Miami Dolphins owner Stephen Ross. Other investors include Liberty Media, T-Mobile, CAA Ventures, and Lux Capital.
Very cool stuff.
Yeah. DRL too has partnerships. Did you see this with the U.S. Air Force,
Yes.
Google Cloud, Allianz, NBC, Sony, and a blockchain tech company?
You gotta
Amaranth.
you gotta start practicing.
Are
with
you
your
gonna
drone
Are you gonna race?
And race.
I don't know. We just got to get it up in the air. Like you got to.
Step one: get in air.
He did something and it landed poorly. You know. Sorry, John.
I
didn't
see
mean to
one of
share
your
that.
neighbors getting really seriously hurt by you.
We got to work on that. All right. Listen, for those of you watching on television, the close is coming up next. For those watching on Bloomberg Business Week, Tim, we're going to count you down on those Tesla earnings.
Yeah, we are. Also, we're going to talk about the rally and talk about the sidecar that Joe referred to. What's going on with the TikTok ban in this latest measure?
And the everything war, Amazon's ruthless quest to own the world and remake corporate power. It's the subject of a new book. It's all next.
This is Bloomberg.
The Magnificent Seven having a magnificent day as we head into the heart of tech earnings. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Shonali Bassick. We're kicking you off to the closing bell here in the United States, and everyone woke up and pressed the buy button, didn't they, Romaine?
Certainly did.
So let's talk about those markets. Let's get a check on where we stand. The S&P 500 up more than 1.2% on the day, near the highs of the session. The NASDAQ 100 also feeling the love, up even higher, 1.7%. And the likes of those semiconductor stocks, like NVIDIA, also feeling those gains. You have the Philadelphia Semiconductor Index up nearly 2.6% on the day. Even the bond market here getting a bid, Romaine. Of course, some softer economic data this morning, as well as a record auction in that 2-year.
Yeah, we're going to talk about that in a second, but let's talk about the Mag 7, 6 days of losses for that cohort here. Well, that's now giving way to back-to-back gains, the strongest 2-day surge right now for the group since the start of March. For the Mag 7 reporting this week, and as Pastanus once said, the stakes is high. Those 7 mega cap stocks making up 29% of the weighting in the S&P, 35% of the weighting of the NASDAQ 100. So as they go, so too goes the market. 5 of the 7 are projected to report double-digit percentage gains in earnings and in revenue, with Apple and Tesla the only outliers. Apple earnings still a week away, but Tesla set to post in just about an hour or so from now. Stay tuned, full coverage up ahead. Now, not everyone is sold on the rebound rally. JP Morgan strategist Marko Kolanovic says that while earnings may stabilize, price action in the near term, he's actually concerned about complacency and some of those equity valuations. He posted a laundry list of reasons he sees softness ahead. That includes rising bond yields, elevated oil prices, high stock market concentration as well. Goldman Sachs tactical specialist Scott Rubner agrees, saying his bank's trading desk shows CTA momentum traders right now modeled to sell stocks over the next week, no matter which way the markets go. And here's one reason why. While forecasts for earnings growth point to continued economic strength, those pairwise stock correlations within the broader equity market, they started out the month of April at multi-year lows, and stock bond correlation, Shonali, they have been reflirting with re-entering negative territory. That typically is a sign of more softness ahead.
I have some more signs for you, too. We're talking about those earnings expectations and just how much this quarter really matters, Romaine. Because when you look at the Magnificent Seven, the expectations for the first quarter alone, it is really expected to drive the S&P here to the tune of 38% EPS higher just for that Mag 7. That's even with profit, except this is soften over there over at Tesla. Now, if you look outside the Magnificent Seven, it's a much different story. Expected declines on the first quarter, but even with, Romaine, the Magnificent Seven here, you still have expected softening throughout the year. So it begs the question on whether the first quarter results are enough to lift this market higher for the year.
All right, one big pillar, of course, of the equity market, one big pillar of any potential gains remains earnings, but the market also, of course, still focused on macro, still focused on monetary policy as all of those elements sort of mash up together today and over the next week and a half. Ash Alankar joining us right now, Global Head of Asset Allocation and Portfolio Manager at Janus Henderson to help us kick off to those closing bells. And Ash, I do want to start off on monetary policy and more importantly, some of the inflation expectations, because before this earnings season started, that really was the narrative out there on Wall Street. And I know it takes a back seat, at least this week, but it's going to rear its head in a big way in just about a week's time.
Well, thanks for having me on. I think at this point in the cycle of monetary policy, it's important, if not essential, for us to ask the following question and reconcile the following facts. How can inflation drop from its peak of 9% in 2023 to about 3.5% today, yet the impact on economic growth, the impact on economic activity has been minimal at most. What are these so-called lagged effects? And this is despite the fact that the Fed has increased the cost of financing, has withdrawn the supply of money from the system at the fastest rate in nearly 4 decades. So why hasn't there been any consequences on the overall economy? And I believe the answer is quite simple. Monetary conditions have not been as tight as we think they are. At a Fed funds rate of 5.25%, if the neutral rate is 2.5%, which is the Fed's believed level of where economic growth and labor, the strength of the labor market is not too cold, it's not too hot, it's just about right, that certainly tells you monetary conditions are very tight, because it's a 300 basis point spread between the overnight interest rate and the neutral rate. But what if the neutral rate is much higher than 2.5%? What if it's closer to 5%? Then at a 5.25 Fed funds rate, monetary conditions are nowhere near being tight. The price of money, the cost of financing, is nowhere near being expensive.
So, Ash,
everything is about fair.
But Ash, if that is the case about fair, is there a consequence to that? Or are you basically describing, I guess, that kind of proverbial Goldilocks scenario?
So there's a big consequence to that. And the big consequence to that, which is relevant today, if monetary conditions aren't tight, it's going to be very, very difficult, for inflation to fall back to 2%. This 9% drop, or the drop of inflation from 9% to 3.5%, it likely had everything to do with supply coming back online and very little to do with monetary tightening, very little to do with the actions the Fed took to increase the price of money, to increase the cost of financing. So to get you back to 2%, the mantra has to switch to higher for longer.
Ash.
The mantra has to switch away from pivoting towards accommodation anytime soon.
But what do you think about this neutral rate? Do you think that the reason it's drifting higher is in part because of growth, or do you think that growth might suffer? You look at some of the economic data weakening just this morning, and investors are shrugging it off, thinking that maybe we can get those rate cuts on the horizon. But people are not talking enough about this potential stagflation scenario. How would that read across?
Yeah, so why do I believe that the neutral rate is higher? It has everything to do with productivity. If you remember back to the 1990s, Greenspan believed the neutral rate here in the U.S. was closer to 5%. He believed the U.S. economy can handle a higher neutral rate because of the productivity boom from the personal computer, from the productivity enhancements, from the information revolution, the coming of the internet. Today, we might be sitting on a similar boom. First, the pandemic taught us a really important lesson on how to better use, how to better leverage existing technologies so companies and operations can move forward with more efficiency.
So, Ash,
we're on the heels.
If you believe in that productivity and efficiency, how do you feel about any potential for a downturn? That productivity is a bullish sentiment there, but if rates stay this high, how do you gauge the potential for things starting to weaken a little faster here?
That's a great question. If the neutral rate is actually closer to 5%, and Powell has praised Greenspan many times for that insight. If the neutral rate is closer to 5%, it tells you the economy can withstand interest rates greater than 5%. So the irony is, even though we have this mantra, and I think policy will start moving towards this mantra of higher for longer, a higher neutral rate implies a stronger economy. It then implies more robust growth, which then implies the markets and the economy are just fine in the medium to long run. The soft landing thesis is still intact as long as the Fed does not commit a policy error And now I believe the policy error is more heightened than it was before because we're trying to peg to this nebulous number of the neutral rate. No one knows what the neutral rate is. It's a nebulous number. The best you can do is try to move into the direction of the correct neutral rate, but that's hard to do if you can't see it, if you can't touch it, if you can't feel it.
Yeah, not to mention that they almost seem like they don't want to even commit to providing some sort of outlook on that. That is going to be a big topic of conversation. And Ash, we have to have you back after the next Fed meeting to maybe get an update here on what they told us and maybe whether they'll acknowledge exactly where that neutral rate is. Ash Alencar over at Janice Henderson helping us kick you off to the close here on this Tuesday afternoon. Coming up, a closer look at JetBlue shares down the most since the onset of the pandemic. We're going to get some insight into exactly why with Helene Becker over at TD Cowen.
Plus, Tesla on deck for one of their most important reports ever. We're going to speak with John Murphy of Bank of America Securities.
And there's a lot of folks really trying to suss out where this market goes next. Our next guest coming up a little bit later is Brent Schutte, Chief Investment Officer at Northwestern Mutual Wealth Management. He says investors are still looking in all the wrong places for all the right things. That conversation and more coming up in a bit right here on The Close. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead is coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been?
Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Calamos Investments is launching a suite of exchange-traded funds that will track a portion of the returns of the S&P 500, the NASDAQ 100, and the Russell 2000, all while hedging 100% of the downside via the options market. There's a catch. Here with more, though, is Emily Graffeo, Bloomberg's News cross-asset reporter. What is the catch? I mean, if you think about the idea of capturing these returns, why would you use the same product necessarily to hedge?
So one of the catches is that naturally, if you're paying for downside protection, you have to give up some of the upside. So these are ETFs from Calamos. The first one that's launching in May is going to track a portion of the S&P 500, but because of the options that the ETF has to purchase and pay for, they have to cap the upside. So in this case, it's going to give you exposure to up to 9.6% of the return of the S&P 500. That's not the only catch. The other thing that investors need to keep in mind is that the protection, the 100% downside protection, only works if you hold the ETF for a certain period of time. In this case, it's 1 year. So you have to buy it on the first day and hold it for a year to get the full protection.
Is there an advantage to doing that over just kind of hedging on your own?
Well, I mean, if you are an options expert, maybe if you're really good at figuring out the math, you can do it on yourself because you do have to pay for this ETF.
Right.
But if,
yeah, and I didn't even look at the fees.
Yeah, it's something like 69 basis points, I believe, was in the filing. But if you don't want to do that, if you just want this, product that you get some stock exposure, but you know you're not going to lose anything besides that upside.
Well, who are they pitching this to? Is it just sort of the rank and file traders? Is it retirees? Who?
Retirees. When I was speaking with Matt Kaufman, he's the head of ETFs at Calamos, he said this is a good product for people who want to be in the market. They can't afford to not be in the market, but they also don't want complete equity exposure. He also said that they're seeing some people have, a portfolio with S&P 500 exposure, maybe 50%, and then they have a little slice of this hedged option.
You follow this, you can follow this market really closely. Do they have other products like this out there, or is this kind of a one-off situation?
So this is the first ETF set to launch that's going to be 1 year. There's a product from Innovator, the ticker is TJUL, and that you have to hold for 2 years to get the 100% downside
I'm sorry,
protection.
I got to push back on this a little bit because the holding period is just confusing me, particularly if you're pitching this towards retirees. Retirees, they are like living the life right now. So they were able to participate in one of the greatest bull markets in the history of humanity. And now, just as that bull market is running out of steam, they get to go into treasuries and lock in 4, 5, 6% long term. Like, why would I want to lock up for 1 or 2 years in ETF when I could just buy, I don't know, a 10-year treasury at 4.5%?
Yeah.
And guaranteed.
I mean, you're not wrong.
Okay.
Yeah, it's definitely for
I tell everybody that. Not everyone agrees with you.
4.5% or guaranteed 9%, I guess.
It's very enticing buying treasuries, scooping that up. I mean, I talk to a lot of people that feel that way. This is a product that's coming out. I will say BlackRock also filed for this. So people say that, they know something. So that hasn't launched yet, but that's another one. I think it's also 1 year outcome period, but 100% downside. Big caveats here, though. You have that period, and you miss out on the upside.
This idea of never losing money.
All right, Emily Grafeo over at Bloomberg. Great story, actually a great look here at some of the ETFs offering downside protection, 100% downside protection, Shanali, if you believe the marketing hype. All right, stick with us. A lot more coming up here on the program, including a closer look at what's been going on in the aviation sector. We are expecting Boeing earnings tomorrow. We got JetBlue earnings today. And they were bad, disappointing. The shares down about 18%. Stick with us. Helene Becker on deck right here on The Close on Bloomberg.
Season 2 of The Circuit. We're walking with the titans of banking.
Hello! You guys love these meet and greet things.
We do! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that
This is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money. You've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
All right, let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations, and we start out with Penn Entertainment, the gaming company getting an upgrade to buy over at Truist, with the analysts saying market expectations are just too low. Say the street is undervaluing the strength of the ESPN Bet Sportsbook partnership, along with Penn's other profitable interactive businesses. They're sticking with their $23 price target as well, and investors bidding the shares up by about 2.5%. Next up, Roblox scoring an upgrade to overweight over at JP Morgan. This on the prospects for new revenue streams. The analyst sees significant monetization opportunity as developers embrace Roblox's deeper push into advertising. The analyst saying that with nearly 80% of hours currently not monetized, there is a clear path to a windfall of Robux. Those shares having a pretty decent day, up about 5%. And finally, let's take a look at Five Below. JP Morgan not feeling as optimistic about the retailer, downgrading the shares to neutral from overweight, saying that it believes that cash-strapped consumers will soon get serious about curbing discretionary spending. They dropped the price target down to $170 from $215. Investors on the day dropping the price fractionally by about 0.6%. And those are some of our top calls. All right, we want to shift gears and take a look at one of the biggest movers of the day to the downside, and it is JetBlue. Those shares taking a hit today after first quarter earnings that the company reported, and its outlook signals some turbulence ahead, particularly in Latin America. Joining us now for more insights is Helene Becker, senior analyst at TD Cowen. She currently has a hold rating on JetBlue. All right, Helene, let's start off here with Latin America. We heard something similar out of Delta, I believe, as well as a couple other airlines, but we didn't necessarily see the same severe downward price reaction that we saw in JetBlue. What's different?
So I think one of the biggest issues is that for JetBlue, it's a bigger percentage of their total capacity than it is for Delta. And the other big part of it is Delta tends to serve fewer beach markets and serves more business markets than JetBlue. And for JetBlue, the real impact was in the beach markets. And for them, the visiting friends and relatives markets were a little bit better. So I think that was a big part of the difference between the two companies.
I am curious also, one of the other things that came up was just kind of about asset utilization and basically the capacity that the company has. I know there has been some costs here associated with grounded planes, as well as some of the other issues that they've been working on in certain markets.
Right. So one of the things they've been doing, because they have aircraft on the ground that are associated with the Pratt engine issue, they've been restructuring the network. And, you know, they've spent a couple of years now kind of being sidetracked, first with the Northeast Alliance that the government initially allowed, and then filed a lawsuit to make them disband it, the Northeast Alliance with American Airlines. So they were doing a lot of flights out of markets that maybe weren't core to JetBlue, but they worked with American and they worked well. Unfortunately, that had to be disbanded. And then the other major distraction was Spirit, right? That ill-fated merger, which cost them a lot of money, number one. And number two, they were focused on doing things with Spirit with their network, that would have made more sense. But because neither one of those two strategic directions were approved by the government, they've got to step back, refocus their operations on their own network, figure out what works for them. And for them, it means reducing capacity in Los Angeles, leaving 7 other markets, and refocusing on Boston and New York. And of course, that takes time and money. So I think that's a lot of what you saw in the first quarter, this whole restructuring. And then part of the loss was also associated with the $500 million they paid Spirit to leave the transaction.
You know, ever since the deal had died, certainly has been a tough road ahead. But what do you think would be the path forward here? Of course, investors are reacting pretty strongly to this print. What would change the story and help them turn around at this point?
Yeah, that's a great question. So one of the investor concerns, and that was sort of the title of our report this afternoon, is on the company's liquidity. People are really concerned about their ability to kind of get through this whole restructuring, because restructuring networks takes time and costs money. They've got $1.7 billion in liquidity. They've got a $600 million revolver that's undrawn, and they probably have some value in their loyalty program. The value is always, that's a tougher one because it's always whatever somebody's willing to pay. But it was estimated as having $1 to $2 billion of worth when they were financing the Spirit transaction. So even if it's the lower end of the range, they don't have any significant debt due before 2026. And they've restructured the delivery schedule with Airbus to push out deliveries to the right. So that will lessen CapEx. And I think they need to improve the revenue picture would be the sort of the number one thing that needs to get done.
Certainly a long story ahead for JetBlue. Our thanks to Helene Becker over at TD Cowen. We appreciate your time and your analysis there. Now, it's so interesting. A lot of people looking at this deal falling through because of the U.S. government and wondering if this is a better thing for the airline industry. I don't know. What do you think?
Yeah, I mean, it would be interesting to see. I was surprised just how much it affected their earnings, though. I mean, because we heard from Delta and American, you didn't necessarily see the same thing. We are going to hear from Boeing, of course, tomorrow, so we'll get a better sense here of what's going on with them and their plane issues.
And coming up, of course, we're going to go from airlines to cars. Tesla set to report one of their most pivotal earnings ever. We're going to speak to John Murphy, lead equity research analyst at Bank of America Securities. This is The Close on Bloomberg.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
It meant that you always look different because you were the first woman, you're the first brown person, the first Asian, the first Indian, the first person of color to lead a global luxury brand. You're always the first. You're always underestimated. People don't know exactly what to expect. They're suspicious of what your agenda might be.
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romain Bostic.
And I'm Shanali Basak. A lot going on in markets today. As you're saying, the buy button has been clicked on today.
Absolutely. You're talking about a 1.6% gain on the NASDAQ right now. The Mag 7, all 7, doing well today, including, of course, one important one, and that's going to be Tesla. They report earnings after the bell tonight.
After 7 days of declines, and you could imagine they haven't even reported yet. And speaking of Tesla, remember, after a wave of bad news, it's set up for one of its most pivotal results yet. And investors will be focused on those margins, its robo-taxi, and the fate of its lower-cost EV. Joining us now is Corey Cantor. He's Bloomberg NEF analyst covering vehicle electrification. The latest research from BNEF shows that EV sales slow, but still stay over 20%. Okay, so they're slowing. How do you think about the next catalyst from here? Is the hype going to meet reality, or is that dead on the vine?
What I'd say is that we're really watching this Tesla earnings pretty closely, given that Tesla saw a decline in deliveries about 9% year on year at the global level, and regionally, Tesla doesn't give that breakdown. So if anything, we want to see what direction Tesla's looking at as it pertains to the U.S. That cheaper Tesla model is really important. If you take the cheapest Model Y today, which is around $36,000 with the IRA, Inflation Reduction Act tax credit, there's about 30% of sales last year that happened below that point. So what that means is Tesla needs to really change its game in the near term, and without that cheaper model, they're going to have to do something innovative. There's concern that they might just focus on the robotaxi during today's call, but if they want to really be growing in the EV space, they need to be bringing on more new models or lowering that upfront cost.
Well, the problem, though, is that what you just said, I mean, that's not like a quick thing to do. I mean, no, innovation, particularly even with robo-taxis, I mean, if you believe Elon that this is actually closer to reality than not. Right. But, let's face it, you have to take everything he says with a grain of salt. So it gets to the point here as to what does Tesla really want to be? Because at first it seemed like they were kind of a luxury car maker. Right. Then they said, well, we're going to go down the price scale, basically be everything to everybody. And then now, at least based on his public comments, they seem to be walking that back.
You're kind of caught in between two different strategies. Yeah. Right? You were originally seen as a kind of BMW or Mercedes competitor. Then you're aiming to compete with a Toyota, like a Camry or Honda Accord. You stop right before you get to that price point of the $25,000 to $30,000 car. Mm-hmm. It doesn't mean that Tesla can't get around there, but there needs to be a lot more clarity about the direction they're actually aiming to go in. And if you just shoot for the robotaxi, we have other companies like Waymo out there that have been testing robotaxis for a long time. That's a completely different business model. So when it comes to kind of an analyst perspective, Tesla really hasn't given much clarity in the past 6 months. And if anything, the kind of exit of some high-profile employees shows they might be moving in a drastically different direction.
Just so we're clear and our viewers are clear, so when he talks about the robotaxi, where's that revenue coming from? Where are these things being sold, or at least where would they be sold?
I mean, that's a big policy question, right? You have to have these robotaxis approved in many different markets. For robotaxis today, you really see a sense of, California, Arizona. But again, there's a lot of kind of steps to get approval there. And that's a different business model than selling electric vehicles.
And it's not even the whole state. It's just like a couple of cities.
Like a San Francisco. You have to go through. So in terms of, that'd be a big shift from kind of moving down the kind of EV ladder towards more and more consumers. And in one last point, in terms of the short-term turnaround, right, with only the Model 3 and Model Y being high volume, how do you become a growth company again if you aren't making big changes to introduce more models?
That's a great question. I think one we're going to pose to our next guest, Corey Cantor, over at Bloomberg NEF, as we continue this conversation, a preview of what to expect out of those Tesla earnings after the bell. John Murphy joining us right now, Bank of America Securities Managing Director and Lead Equity Research Analyst. He has a neutral on Tesla and a 220 price target. And John, I do want to pick up with what Corey was saying here, is that, for investors, this was the ultimate growth story for quite some time. But we're now looking, at least if you believe the analyst estimates, we're going to see a drop in revenue for the most recent quarter and a significant drop in profitability.
Yeah. So, I think the hype around growth is really what we need to focus on, or the lack thereof, in the near term. When you look at this, that the news that the Model 2 might be canceled, I think threw everybody for a loop. And I think, Reuters uncovered some interesting stuff there. The reality is, without that Model 2, the growth narrative actually does change quite dramatically. And to be honest, that Model 2 is coming a little bit later than it really should be in the first place to keep the growth narrative going. But then there's this second question around the robotaxi technology and FSD, autopilot, whatever you want to call it, the level 4 or 5 technology at Tesla, and really what that can do for the economics of vehicles themselves, right? Because right now we're seeing grosses compressed as pricing is coming down. But the big question is, can Tesla and Elon really change the economics of the vehicle that you buy and potentially these robotaxis over time? So the math on all of our models would change quite dramatically over time. It wouldn't just be sort of the upfront point of sale or even subscription revenue. It would be sort of a longer-term potential tail.
There's the money that's being brought in, right? That's what we're talking about, the price points changing from consumers, but there's the money that they're outlaying. And if you think about the Tesla pivot here, how expensive is this going to be, and what potential does it have to continue to weigh on margins for a longer period of time?
Well, I mean, the reality of level 4 and 5 autonomy seems like even at Tesla or Waymo or Cruise at GM is years and years out. So I think that's a very fair point, that it will weigh on results, cash flow materially for years to come, which is why that Model 2, sort of on the more traditional side, would be so important. So I think you've got a number of years of waiting for this. And the reality is, nobody's proven to actually really make it fully work just yet. Waymo and Cruise have actually done a pretty good job. Elon and Tesla are way behind, which is why we're all sort of waiting with a bated breath as to the news either today or on August 8th with the robotaxi day.
Tesla stock today trading at $144. Of course, we've said yours is well over $200. What gets it there? How much risk is there to your price target at this point?
Well, with this stock, it's incredibly volatile to the upside and to the downside. And we all know that news flow and Elon's tweets, or X's, whatever you want to call them these days, has a major influence on the stock in the short run. So when you're talking about a growth narrative like this, you call it a hope, or you can call it a factor on robotaxi, Model 2, or any products in the future. Really what people are betting on is Elon's ability to innovate and drive value over the long term. So we're hyper-focused on short-term results here, which is something we all need to do as a financial community. But ultimately, where this company lands in 5 or 10 or 20 years is really a lot more impactful for the valuation and the stock. So it really could be pretty volatile. And I think news that the Model 2 is coming and that the robotaxi technology is actually working to some degree could be enough to really lift the stock in the short run. And a lot of bad news is already known by the market. Whether it's baked into the stock is debatable, but a lot has flowed in the last few weeks, and really I think is largely in the stock at this point.
I am curious, so on the point of profitability, I mean, we know it's going to be probably a choppy couple of years as they sort of, pivot to whatever the next big thing is, John. We know they have the manufacturing capabilities. They can certainly compete on volume here. Are there cost-cutting measures, though, that the company can take, certainly in the short run, that would maybe give investors a little bit more juice until that revenue growth story comes back into play?
I think there's an opportunity to cut costs, but Elon has been cutting price to drive volume, very quickly. So, there are kind of two lines that are moving in similar directions, and the price cutting is actually moving faster than the cost cutting in the short run. To belabor the point on the Model 2, the idea there that it was going to cut costs or the bill of materials by 50% and really create a $25,000 plus or minus entry-level vehicle to really grow volume would be key. To do that on the 3 and the Y right now would actually be pretty hard and take years to get there. And I think, one of the things that we all need to recognize is the 3 and the Y pricing coming down as much as it is starting to overlap with that entry-level price points of that Model 2. So they need to be careful about the positioning of products sort of in the price spectrum and in the market in general, that they don't take that pricing down too far, then all of a sudden have some trouble slipping the Model 2 in underneath it.
All right, John, going to have to leave it there. Really appreciate you helping us out today as we look ahead to those earnings out of Tesla. John Murphy over at Bank of America Securities. Those shares higher by about 2% here on the day, though we should point out Shanali down about 30% since they last reported back in late January.
Yeah, and of course, I like the headline on the terminal, this idea of no man's land.
Yes.
A lot of these analysts have very divergent views on whether this is a negative or a positive catalyst for the stock, given not only the uncertainty around Model 2, but any other extraordinary issues that they might have.
And it gets to the question of identity. And I was trying to get this out of Corey, but it's kind of like, what does Tesla want to be? Are they going to be a luxury car maker? Are they going to be kind of like a GM where we sell everything to everybody across all price spectrums? Are they going to be a Chinese company? They're going to be an American company? There's so much there.
And at the same time, you have to wonder if that identity crisis spans across the industry. What does GM want to be in reaction to what Tesla wants to be?
Absolutely. All right, a lot more coming up here on the program. We're going to take a look at some other stocks on the move today. Lockheed Martin, RTX out with earnings a little bit earlier. Lockheed Martin actually reiterating its 2024 outlook, but there are still some big challenges up ahead. That's coming up next in our Stock of the Hour, right here on The Close on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
right, welcome back. Let's take a look at Lockheed Martin. First quarter operating income is in, and it did beat expectations. The defense company delivering more fighter jets and missile systems, and all 4 of its business units increasing sales in the quarter. Though we should point out the shares, which are having their best day going back to October, have given back all of those gains. Some concerns here about the outlook going forward. And Shanali, I did have a chance to catch up with the COO, Frank St. John, as well as the CFO, Jay Malavi, a little bit earlier to kind of ask them about whether they were going to stand by their full-year forecast. This was the forecast they gave back in January. They reiterated it today, and they said, look, they have some confidence that they're going to hit those numbers, which is basically about $70 billion in revenue for the full year and roughly about $26 or so on an EPS per share basis.
You know, it's interesting. You're talking so much about the aid package as well. That happened after the first quarter ended. How does that really change the equation?
Yeah, they talked about that. We were just on Bloomberg Television. We saw it working its way through the Senate. That appears to be a done deal. So these includes money for arms sales to Israel, Taiwan, as well as to Ukraine, about $95 billion in that. A lot of that is going to flow to Lockheed. There was another contract that was just announced a few days ago, a $17 billion missile interceptor contract. Now, that's not reflected in the most recent earnings because that was actually posted after the quarter ended here, but that will flow through. Hopefully, we'll see that flow through into 2Q and 3Q and beyond.
It's interesting. As far as their business units goes, too, I mean, how much is really the war a backbone of their performance here? Their stock is only really up 2%.
It is.
Is it already all kind of priced in these contracts?
Yeah, I mean, they have kind of like 2 kind of big components. They have those really long-term contracts. These are like the F-35, F-16s, those programs that just take decades to work through here. Those are the long-term contracts. Then you have more of the short-term cycle stuff, and that's basically missiles, munitions, things that have to be replenished relatively quickly.
The presidential helicopter, does that count?
The presidential helicopter, which I don't know if we want to talk about that. They did not mention that on the call. They didn't really talk about that, but we had a great story on the Bloomberg, how they've had to actually put that on the ground for a little bit. Some issues. Did you hear about this? Apparently when the rotors go on, when it lands, it actually scorches the earth around it, which is apparently a no-no.
Well, I'm sure Joe Biden needs his helicopter back pretty soon. So.
Yeah, I mean, he's got places to go, I heard, you know. I mean, you can't, you know, Joe Biden ain't going to be riding the subway anytime soon.
Right. More markets coming up next. We're going to talk to Brent Schutte, the Chief Investment Officer at Northwestern Mutual Wealth Management. This is The Close on Bloomberg. Stick with us.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have 2 assets in the sports business that don't have are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Market on close imbalance, 402 million to the sell side.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
This is the countdown to the close. I'm Romain Bostic alongside Shonali Bassick. 10 minutes, Shonali, until we get to those bells, and it's going to be a big day here. We really start to get into the heart of earnings season. Tesla after the bell tonight.
It's been a big day already. We've had so much love in that stock market, a lot of green on the screen. You had a lot of negativity in the week leading up to this, really, the weeks really leading up to this, and now investors putting cards back on the table even before you see those earnings come out. You have the S&P up 1.2%, and even more love in those technology-focused stocks, especially those semis, and a bid in the bond market as well.
Absolutely. A little bit earlier, of course, we talk about what's sort of holding up this market, whether it's earnings, whether it's some of the concerns about geopolitics. But don't forget, monetary policy and inflation expectations still in play. We had a chance to catch up a little bit earlier with Ash Alencar over at Janus Henderson and asked him about why he thinks Fed hikes have not had a bigger impact on the economy.
Monetary conditions have not been as tight as we think they are. At a Fed funds rate of 5.25%, if the neutral rate is 2.5%, which is the Fed's believed level of where economic growth and labor, the strength of the labor market is not too cold, it's not too hot, it's just about right.
And that was Ash Alencar over at Janus Henderson helping us kick us off to the close just a little while ago. And here to help take us to the bells is Brent Schutte, Chief Investment Officer over at Northwestern Mutual Wealth Management. And Brent, I do want to start off with monetary policy and inflation. It seems, at least for right now, we've kind of put that to the side, the idea that everyone's focused on earnings. But we'd be remiss in not pointing out that the Fed's business is still unresolved here. And I'm not sure anyone really has a real handle on what the Fed is going to do next.
100%. I agree with your prior guest. I think the U.S. economy has been somewhat interest rate insensitive. I would put it a different way, though. If you think about consumer debt, a large majority is mortgage debt. And most mortgage debt post the Great Financial Crisis was fixed rate. And so if you look at the outstanding mortgage debt in the U.S. economy, it's at 3.8%. Contrast that with the 7.5% that we're at right now, and you can see how a lot of people haven't actually felt this. Better, a lot of wealthy people have actually probably seen net gains because interest rates have risen and they've been benefiting in their portfolios. Contrast that with lower income consumers where you are seeing some pain, where you've seen interest cost of consumer debt, of auto loans go up, and that's where you're seeing some of the pain right now. And I just think that's kind of more of a commentary on the longer rates remain elevated, the more they work their way into the economy, and I think the more they erode some of that strength in the U.S. consumer overall. And that's where I still think we have to face that music in the future, because I don't think inflation is going away, and I don't think the Fed's business is finished.
So, I mean, based on what you just said here, you don't think the Fed is going to have enough of a cushion to cut this year?
I don't. We've been talking about rising inflation for some time now, and the market has kind of ignored it, as has the Fed. I mean, they kind of did their pivot in December when I thought we saw signs that inflation was moving the other direction. You could look at the Cleveland Fed median CPI. You can look at the service sector inflation, which on a trend basis is actually increasing. You can look at the distribution of PCE components rising more than 3% or 5%, and they all point to inflation being higher. And so to me, I don't think the Fed's going to be able to cut rates. And it all comes back to that narrative of how long does monetary policy have a lag. And I think in this cycle, it's been more just because of the dynamics of the U.S. consumer and corporations, which had termed out debt. But again, the longer it stays elevated, the more it works its way into the economy. And I still think that eventually leads to a mild recession somewhere down the road.
I mean, there's just been an incredible adjustment in the bond market, Brent, already. But what about the stock market? Do you think that the recalibration of expectations has fed through into risk assets?
I think it started to last week, and I think earnings probably this week are a nice distraction away from that. But I think we're going to have to face the music, like I mentioned before, on the inflation front and on the interest rate front and on the economy front. I think parts of the market have already discounted, and that's where it's a little bit odd when I talk about what we actually like. Look, we like small and mid-cap stocks, and those are more economically sensitive than high-quality large-cap stocks, which I think have been bid up on that. Who doesn't come on your show and talk about them being high quality, and who hasn't moved money there because of that? This is where I think expectations are important. And to me, small and mid with their discounted valuations already are discounting some sort of potential for a recession. And I think the irony of it will be once the recession arrives, they will probably draw down less, and then on the opposite side, do much better. And this is kind of what happened back in 1999-2000, where we had a similar setup to today with a number of stocks, just a few stocks driving the higher quality S&P higher, while the rest of the stocks didn't benefit as much. And then into the recession on the other side, those names did very well.
But does that mean you're ready to put money into those small and mid caps at this point, given the volatility around them?
I think you need to start thinking about moving to where the puck's going to be. And so I don't think anybody has perfect timing. And to me, especially in this environment where you have a Fed who is very reactive and very forecast driven, seems to kind of shift around quite a bit. I do think eventually the Fed will be able to, or will have to actually cut rates fairly aggressively when that recession arrives. That could be the timing point for these names to start outperforming. But I wouldn't try to time that. And I think about maybe taking a little bit of a step in right now, because I think you already see a reflection of that in their valuations. And then thinking about accelerating that as you do get that market downside.
Brent, we'd be remiss in not getting your thoughts here on the earnings season. I know we're still early into it here, but I think everyone's sort of looking at corporate fundamentals. And I know, at least with these big cap tech companies, not always a true reflection of the economy, but this is what has kept the market afloat here. What's your general expectation?
Look, I think companies have jumped over lowered bars. I think the question going forward is how do input costs? And so wages are a large portion of companies' expenses, and wages aren't coming down. They're actually stalled out around the 4% area. And you see this in the NFIB, and so maybe another discrepancy between those big tech stocks and the rest of the economy. If you're having your input costs go up, you might try to raise prices, and you're seeing that. That's a no-no with the Fed, and so they're going to keep rates high. The question is, when do we start seeing margins erode, which would then cause potentially companies to actually have layoffs, which I think is still something that will occur in the future as these two things kind of have to work themselves out.
All right, Brent, always wonderful to talk to you. Brent Schutte over at Northwestern Mutual Wealth Management, the Chief Investment Officer there, helping us count down to these closing bells. Those bells now just a little bit more than 3 minutes away. And, of course, Shonali, there's going to be a lot of discussion after the bell. We get quite a few earnings. I mean, more than just Tesla. We get names like Visa and Texas Instruments and a few others as well. But, of course, Tesla is going to be the star of the show.
It sure is. I'm interested in Visa, too, just for that health of the consumer, the impact of the interest rates. Let's see if that creates any dent after the data this morning. The economic data is showing some weakness. But on Tesla, I've got to say, interesting drumbeat started. Top Live is already on the Bloomberg terminal.
Yeah, we're going to have full blanket coverage of this. We should point out right now the shares holding on here on the day, up about 2% as we head towards the close. The options market right now implying a move up or down of roughly about 8%. But we should point out the last 4 earnings reports that we've gotten out of Tesla, we've seen the shares drop by 10% or more each time here. Of course, the expectations coming into this earnings season a little bit lower, that bar lower as Brent was referring to. So maybe, just maybe, it won't be the big disappointment that it could be.
It certainly can here, and we're moving closer to that closing bell, Romaine.
We certainly are. Stick with us. We have our full market coverage as we break down all of the action today and everything that happens in the bell and beyond.
Beyond the Bell Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Shonali Bassick. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast. Carol Massar and Tim Stenovic joining us right now as we welcome our audiences across all of our Bloomberg platforms as earnings season really gets into full swing. Quite a few set to cross after the bell tonight, including Enphase, including Chubb, including Steel Dynamics, including Mattel,
Tesla,
including Visa,
including
I forgot that one, Tesla.
Who's your favorite child, Romaine?
Tesla. Stock is up 1.8% as we say. It's off its highs of the session, but we saw a rally in Tesla shares today. And speaking of rallies, guys, the S&P 500 now up 2% in the past 2 days. So different tone.
So we're awaiting Tesla. We spoke to Nancy Tangler over at Laffer Tangler Investment. She was just in our studio, and she said, we think a lot of the bad news is already priced into Tesla, and they could actually be adding to their position. They added at $180 a share, right now at $144 a share. So she acknowledged that she got in a little early.
Well, it's interesting, too. You have a lot of analysts that are still having price targets that are way higher, above 220 or so. So, of course, there is some buying appetite out there. The question is what gets it there?
Yeah, I mean, what gets it there here? I mean, let's walk you through the numbers here because we're looking at analyst estimates right now of adjusted EPS of about 52 cents a share. That's a massive drop year over year. And even on a revenue basis here, we're looking at something around $22.3 billion if you believe analyst estimates. That would be a 4% decline here. And it's been quite some time. I have to go back and look since we had a quarterly decline in revenue over at Tesla. Let's get you the closing bell numbers ahead of the earnings here. Green across the screen for the major indices on this Tuesday afternoon. It takes a while for these numbers to settle, but you see it there on your screen. The Dow Jones Industrial Average up more than 260 points, or about 0.7%. The S&P higher by roughly 60 points, or 1.2%. The NASDAQ Composite going to close out the day higher by more than 200 points, or about 1.6%. And look at this. Cyclicals and small caps getting in on the party. In fact, that was your outperformer on the day. The Russell 2000 higher by 1.8%.
Yeah, and taking a look at the S&P 500, most of the names in the index actually higher today, Shonali. About 388 names posting gains in today's session. And you've got about 111 to the downside, 4 unchanged.
It's interesting. You looked at sectors, still broad-based gains across those sectors here. Communication services, information technology leading the way, though you did have a strong bid in industrials and consumer stocks as well. Healthcare also up more than 1% on the day. Materials really your only loser on the day today, guys.
All right, real quickly, guys, as we await those earnings to cross, Tesla shares, as I mentioned, up 1.8% in today's session ahead of their earnings, still down more than 40% year to date. So sentiment obviously very negative here in 2024. Globe Life, ticker GL, number one gainer in the S&P 500. What? I know, an insurance company raising its operating earnings per share forecast for the full year, and the gain extending a bit of a rebound from a record drop earlier this month in this name following that short seller report. So number one gainer. Do we want to do some earnings here?
Texas Instruments crossing the wire right now. Is that what you're looking at?
That's what I'm looking at.
All right, well, let's do it here. Revenue coming in the first quarter at roughly about $3.66 billion. We'll round it up to 3.7. That would be a beat over street estimates of 3.6. EPS coming in at $1.20. That's versus $1.85 in the prior year here. So a bit of a drop there, though it does look like it came in above estimates. Here's your forecast going forward. 2Q revenue, the company guiding $3.65 billion to $3.95 billion. The street was looking for 3.8. Here's your guidance on EPS. $1.05 to $1.25 was what Texas Instruments is guiding for. The street was looking for $1.17.
Not getting a ton of commentary, at least in the press release at this point. Just going over the numbers, revenue decreased 16% from the same quarter a year ago, 10% sequentially. Revenue declined across all end markets. This according to the company's president and CEO. Also saying that the second quarter outlook is for revenue in the range of $3.65 billion to $3.95 billion. Earnings per share between $1.05 and $1.25.
Now, I also want to bring you some news over from Goldman Sachs. Goldman did hit the first record high since 2021 here. The shares have risen 1.6% here. And you have some interesting movements there on a day that you really have no interesting news, frankly. Yields are on the decline again, so maybe that's pretty good for markets.
Maybe says something to sentiment, like overall, right, that we've seen certainly over the last couple of days. Just watching, though, Romaine, shares of Texas Instruments on that outlook. That stock now up about about 5.8% here. So investors moving it, as we said, sees a second quarter revenue $3.65 billion to $3.95 billion. The estimate on the street is $3.78 billion. So investors definitely driving this one, although we're bouncing around a little bit, but still, for the most part, much higher here in the aftermarket for a stock that hasn't done much this year, down about 3%.
Yeah, absolutely here. But of course, a lot of people look to this, not quite in the zeitgeist when it comes to AI and chips overall, but it does give us a little bit of a peek here into one corner of that market, particularly because we're going to have to wait, I think, like another month before we get NVIDIA.
Yeah, exactly, right? And that's going to be a big one, right? That AI bet. Tesla shares, guys, just starting to cross the Bloomberg terminal remain. All right, let's get you those numbers right now. Tesla crossing the wire. And let's go right to it here. The company coming in, EPS coming in at 45 cents a share. The street was looking for 52 cents a share. So
Tesla's earnings coming through now. Adjusted EPS a miss of 45 cents on estimates of 52 cents. Revenues a miss as well, $21.3 billion, an estimate of $22.3 billion.
They're also saying that they still see notably lower volume growth rate.
So Tesla to accelerate the launch of its new models, and new vehicles include more affordable models as well, Tesla reports. So again, Tesla have reported their adjusted EPS and revenue now, both coming in at misses on their estimates. 45 cents on estimates of 52 cents for EPS, a revenue miss at $21.3 billion on estimates of $22.3 billion. So this is Tesla earnings coming through earlier than expected. It was due to print 5 minutes past the hour.
Sentiment has been really low. So again, first quarter adjusted EPS, guys, 45 cents a share. That is light. The street was looking for 52 cents. First quarter revenue also light, 21.3 billion versus an estimate of 22.3. But again, looking to accelerate the launch of more affordable models. That's going to be key because that's been a pivot, or at least a pivot in tone, if you will, from Elon Musk, that maybe it was backing off of a more affordable Tesla model, which would reach, as you know, Romain, a much more wider audience.
And wasn't this the big issue, right? Because when that report,
so noting Tesla shares up around 8% post-market, with NASDAQ trading around 1.7% up following these Tesla earnings. So again, misses on the headline numbers of EPS and revenue, but they do note that they are to accelerate launch of more affordable models as well. So again, shares rising 8% post-market following lineup updates.
U.S. models here, we see where a lot of that market share is going.
Well, I'm going through the deck right now for the 2023 update, the quarterly update deck right here, and it's 31 pages. The company's saying that they experienced numerous challenges in the first quarter. They cite the Red Sea conflict, the arson attack at the Gigafactory, the gradual ramp of the updated Model 3 in Fremont.
Tesla do also note that they are still seeing a notably lower volume growth rate for this year.
Lower raw material costs. The company also saying, talking about the autonomous and electric future, is saying that we believe scaled autonomy is only possible with data from millions of vehicles and an immense AI training cluster. We have and continue to expand both to make full self-driving supervised more accessible. We reduce the price of subscription to $99.
We have also just seen Visa reporting their earnings as well. Net revenue, that's a beat at $8.78 billion on its estimate of $8.63 billion. Adjusted EPS a beat as well at $2.51 on estimates of $2.44. The EPS at $2.29 year over year, that was at $2.03, $2.03. That's a beat as well. A total Visa processed transactions at $55.5 billion, beat on estimates of $54.91 billion. Their cross-border volumes at a constant currency are up 16%.
The deployment in capital that they're willing to put forward.
And this is what Tesla does, and they do it great, basically trying to guide towards that future. But I do want to just focus real quickly on the here and now, because when you go through some of these numbers in that most recent quarter, they were awful, and they were actually a lot worse than what some folks talked about. We talk about Model 3 production at that Fremont factory, down sequentially as they changed up the lineup. They talk about the production at that Gigafactory in Shanghai, down sequentially once again, although they do expect demand to improve later in the year. Model Y
Tesla's Q1 negative free cash flow at $2.53 billion, estimated for a positive $653.6 million. That's a miss.
How long term is that going to be, Carol?
Well, it's always timing, right? How long it takes. And I'm looking through the deck too. In 2024, Tesla says our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle and other products in 2024.
Tesla's first quarter operating income as well as a miss, $1.17 billion on estimates of $1.53 billion.
Automotive business, which is something we were talking to Nancy Tengler about. Was it the battery? But the battery business and the importance of that.
So analysts note at first glance Tesla's results look pretty bad, with Q1 revenue and adjusted EPS missing expectations, yet the stock is up 7% post-market after the company said it updated its future car lineup to include more affordable models. The speculation about Tesla giving up such plans has been weighting on the stock lately.
For the new models accelerated ahead of the previously communicated start of production in the second half of
Tesla's first quarter gross margins are a beat at 17.4% on estimates of 16.5%.
To market faster. And they do talk a little about the robotaxi here, continuing to pursue a revolutionary unbox manufacturing strategy. So that is the outlook. That is page 10, right before you get to the market share here. But it does come right after they lay out all those challenges ahead.
Isn't this important?
And Tesla also comment that the product updates may lead to less cost cuts than expected.
The launch of more affordable models, as we talked about Remain earlier, the reports, the back and forth of like, are they not going to do this? This is so important to the story going forward.
Yeah, absolutely, Carol.
All right, guys, we got to wrap. I know you guys just got more on your side, but we are seeing shares of Tesla definitely rallying in the aftermarket. All right, that's our cross-platform, radio, TV, YouTube, Bloomberg Originals, breaking down, of course, those Tesla earnings. We will see you again, same time, same place, tomorrow.
And we continue our coverage of those earnings out of Tesla better than any other. The shares higher in after hours, trading by about 5%. Adjusted EPS did come in at a miss, about 45 cents. The street was looking for 52 cents a share. Revenue also slightly lower, 21.3 billion. The street was looking for 22.3 billion. But the shares higher, apparently on the longer-term outlook here, and the push to shake up that lineup.
Also reports that Tesla are currently working on a ride-hailing functionality as well.
Co-host of Bloomberg Technology. And Ed, let's start off with the long term here, because I think this is what everybody really wanted clarity on, which is their lineup is stale. Let's just face it. They've got a lot of competition now from all the legacy automakers and whatever the heck China is doing. What they're saying right now, while it's light on specifics here, provide some context here as to where Musk really wants to move this company over the next couple of years.
Well, I think definitively the shareholder deck in the first instance gives exactly what the institutional or Wall Street giants who had a more affordable EV at the heart of their bull thesis, what they wanted, and it gives the larger retail investor base who believe in a robo-taxi future what they wanted. What Tesla is outlining in this shareholder deck is completely consistent with what Dana and I reported Sunday night in the Big Take. We reported via sources that a large body of work went in at the component level and at the production process level to bring a range of more affordable EVs, not just one single model. That is exactly and explicitly what Tesla is saying in the shareholder deck. At the same time, they also are pretty explicit that a purpose-built robo-taxi is coming. You will remember that Elon Musk refuted the idea, first reported by Reuters, that an affordable EV program was scrapped or cancelled. Clearly it's not. Tesla's explaining in the shareholder deck that if anything, it's being pulled forward ahead of their original timeline of late 2025. So there's some consistency there, though you cannot hide from how terrible a quarter the first quarter was for Tesla in the near term.
I'm really interested in that idea of pulling up the timeline here. They said that they will accelerate the launch ahead of that communicated start of production in the second half of 2025. How fast can these things get out there, and how important is it that they get out there quickly?
Yeah, I mean, let's be honest. Elon Musk has a track record of not meeting the deadlines and timelines that he's set himself. He often delivers the end product just later than expected. But I think that what's interesting here is that in the first quarter, clearly the deliveries number missed. And if you look at the financials, both at the top and bottom line, it was not a great first quarter. The strategy of cutting prices to the bottom did not open up new addressable market. It didn't help them improve volumes. So the long-term thesis of many institutional investors is like, look, you need to do what the car industry's always done. Offer many more models very quickly at a range of price points, but particularly low price points. And just reading the specifics of the deck, that's what they say they're going to do.
Yeah, and they should point out, too, I mean, they are warning, at least in this presentation, that while there are a lot of long-term benefits to this, Ed, in the short term, they're saying that this may result in achieving less cost reduction than previously expected. They did not quantify that. But I want to read something else to you that they had in here and get your thoughts on it. And this has a little bit more to do about this idea that they're kind of on the precipice of sort of some new expansion. They say we're currently between two major growth waves, Ed. The first one began with the global expansion of the Model 3 Y platform, and we believe the next one will be initiated by advances in autonomy and the introduction of new products.
Yeah, my reaction to that is the first wave of growth, which Elon Musk probably has previously stated that phase between two waves, right? But let's think about wave one. Look at the inventory numbers. Tesla has 28 days of inventory of its existing products. That is an all-time high. Those vehicles are not selling. But benefit of the doubt, in the first quarter, they started to recognize higher software revenues from full self-driving. There was a sprint finish in the month of April to onboard more customers, and you guys will remember the reporting that Elon Musk was making it mandatory that if you went and picked up a new Tesla, the sales rep had to demo FSD for you. Well, that's also there as well. Higher FSD revenue recognition year on year, better software sales. But now we're in the middle, and there's probably likely to be some short-term pain where even with continued price cuts, Model Y and Model 3 where they're currently at, and Cybertruck being low volume, that's not going to be the driver of growth. Selling the software is improving, but it's nowhere near the future that Elon Musk envisaged. So it all goes to the call. Time for earnings call bingo, time for the Top Live blog, and let's actually get some concrete clarity. But the stock being up 8%, Romain, I think it really
Visa
speaks
shares
to this
gaining
idea
3%
that
post-market following their earnings beat.
who wanted the cheap EV, or you're the technology romantic who wanted the
Keeping an eye on Tesla shares as well, floating around 7-8%, 7 or 8% even in a post-market trade.
Earnings. Full coverage right now on the Bloomberg terminal on our T Live, and full coverage right here on Bloomberg Television continues with those shares higher by about 7% here in after hours trading. A miss on EPS, a miss on revenue, a beat on gross margin in the most recent quarter, but cash flow still looking healthy, I should say. And of course, Elon Musk saying that look into the future here. They're going to rejigger that lineup here and pivot to the next phase.
So following the close of the US cash equities markets, just going to give you guys a quick market wrap of the session today. So a rally in tech heavyweights lifted the broader stock market, with Wall Street investors viewing the group's high stakes earnings as a key test of the equities bull run. Following a sell-off that sent the market in its worst week in over a year, every mega cap in the Mag 7 cohort rose. Tesla ended a 7-day losing streak ahead of its results. Treasuries briefly extended their advance following a strong $69 billion sale of 2-year notes, and